All right, hey everyone. We will get excuse me, getting started in a couple minutes here. Anka was having a couple technical issues, but she's here now. And right,
Hey,
so she's,
okay, talk about a technical mess.
that happens sometimes.
Oh
So
my goodness. Yes, my laptop quit. My desktop wouldn't connect to anything. It was just a mess. Anyways, so I'm
okay,
really glad I'm here. All right, I'm gonna be sharing the screen. You guys get the tickers ready. Okay, I thought I lost you guys again.
all right. Uh, no, I can still hear you. For everyone in the room right now, if you could just type something in the chat if you can hear us, okay? Want to make sure that's working. All right, there's a couple yeses there. Everything's
All
good.
right, hello everyone. Good morning,
Oh,
everyone.
yeah. When you're ready to start, let me know so I can do my recording.
Okay, I'm ready to start.
Okay, great. Okay. Let me just double check everything one more time. Okay. I'm gonna start my recording and do a quick introduction, then turn it over to you.
Okay. Hey, everybody.
All right.
Thank you so much.
Oh,
Okay.
sorry. Yeah. Hi everyone. Welcome to Analyze Your Trade, episode number 226 for May 29th, 2026. We are live on TimingResearch.com and also live streaming to YouTube. So if you have to leave the Zoom room at any point, you can still watch live on YouTube. So just a reminder, all of these presentations are for educational purposes only, and trading you should only trade with money you can afford to lose. And please consult a financial advisor and make sure that's appropriate for your situation. And all right, so here we are. To open the day for us is Anka Metcalf.
Thank you so much, David. And hello, everyone. Thank you for being here. Um, all right. Let me see if I could start recording. David, I can only record to the cloud for some reason. Just it wouldn't take the computer recording. But anyways, it's being recorded. So that's good. All right,
Hold
everybody. So
wait, no,
yes.
that messes up the whole situation.
Okay, I'll stop. Hold on.
Sorry.
Okay. Stop recording. I can't record to the desktop. I don't know why.
Okay,
I've been
that's
having, okay.
yeah, that's fine. But
Okay.
um,
Okay.
all right, go ahead.
Talk, talk about doing this on a Friday, right?
Yeah, maybe we should rethink that. That's
I mean, everything like on my side, the
yeah.
tech side is just all screwed up. I don't know what's
Okay.
going on with my computer, with my internet dropped, so it's just okay. So, all right, hope you guys have the symbols ready for me. If you guys want, I can do a little bit of an overall market analysis right now to see because it is the end of the month and we had a really phenomenal rally for the month of May. May was extremely bullish. And yeah, we can start talking about the market internals. And while you guys are gonna type in the first symbols that you guys are watching, okay? Market review, you guys got it. Okay, so let's take a look at the cues. First of all, I want to take you guys all the way here to the monthly chart. So this is the monthly chart. Guys, this is the cues. And these are the cues. And look at this massive move that we've had this month. Not only this, but we had the prior month that was spectacular and it was poised for a continuation. Usually, when we see this type of price action, and especially that we have just come up from a really super duper choppy environment within the last prior months, now that we finally had the breakout in April and continuation in May, I'm expecting a continuation in June. That's right. I'm expecting a continuation in June. So this is still very bullish. We are going to have a very bullish close to the month. We've had an all-time high register today. So I'm expecting a very bullish June as well. Remember, June comes with its own issues. We have the quadruple witch option expiration, but we have the FOMC meeting. We have the contract roll in the futures that is happening the week of the quad expiration. And we also could expect based on the strength that we will be having or weakness based that we will be having into the first 2 to 3 weeks in June, we could potentially have a big massive window dressing for the whole entire quarter. And then June marks the end of the quarter, because if I take you to the quarter right here, look at this bar that we're getting. So it's a very bullish quarter, but we still have 1 month left within this quarter. But the weekly chart suggests huge, massive breakout that occurred this week. So we are trading above the last week's high and the prior week's high, and we have engaged higher. This is poised for a continuation higher. Although I will mention one level in the Qs, if throughout next week we will be trading below this week's low, 722, 724, expect a shallow pullback. And I'm expecting the pullback to be right at around 700 to 696, or even a little bit steeper to the 10 EMA, but it's still within the trend. We are dealing with a super massive power trend here, guys. So bullish. You can see the level right here. This is going to be like the pullback below. And this is what the macro analysis is showing us. We have a huge level. We had a huge level of resistance, and we had a huge level of support here. We had a little bit of a shake. This is called a forced sell action executed by hedge funds and institutions. What they do is they trigger below the lowest point of support to have a lot of retail traders stopping out. And also, let's face it, some other individuals that not only retailers, but there are some funds that are still using stops. So this is a reaction from everybody stopping out, and heavy accumulation from the institutional side that literally full throttled the price higher. So yes, we are still in a power trend. In fact, here today, you can see that we are extending above this sandwich. This is a sandwich. This is a compression sandwich right here. The fact that we're trading above 737 shows that the price is ready to continue higher. So next week, again, watch for the levels that I gave you guys on the monthly and on the weekly, because they're going to be instrumental for the continuation higher or for the rejection. As far as the SPYs are concerned, we do have we are dealing with a massive breakout. We had a multi-month base. This one that you guys see here, this was the blast off area. This is the key resistance that we have had into the market. This is a pullback. We had a fib extension here. The market has pulled back. We have regained the 10 exponential moving average, and now we are literally moving higher. We are expanding higher right now. This is the daily. Now, from the weekly standpoint, another massive move to the upside. But notice that one thing that I have noticed actually last week is that, and the week before, is that we had the first sign of not weakening, but the first sign of stall. And last week we had an inside bar in comparison to the high low. So the fact that we have been basing here into this level just shows propulsion higher in price. So if you're wondering, okay, she's talking about, new highs, and she's talking about, a possible continuation higher. Where are we going to go? Are we going to go to the moon? Well, the moon is not an indicator. So I'm going to give you some levels based on which we could take our trading decisions to the next level. So the next target is going to be 760 for the spiders and 778. So these are the two clear void areas in which the price action can start extending into. Okay, so I'm going to take a quick look at the Dow here, and then we're going to analyze the trades that you guys have posted in the room. All right, so let's take a quick look right now, and these are the diamonds over here. The diamonds were a little bit more sluggish because they didn't really break out that, didn't really have the force to break out. But we've seen, and I see that somebody's asking about IBM. IBM is having a full throttle day today, so we're going to take a look at that in a second. So we have a double bottom support. We have triple bottom support. This is the bottom of the base right here that formed that clear setup. And again, this coincided with all the market internals, with the Qs and the SPYs. And also, we have had the big support area being developed here as a multi-month support zone. Here we have the first area of resistance. Here we have the second area of resistance. So as you could see here, with the price action was trending higher, but then this was a peekaboo high because the price action just fell back into support and rotated back up. And now we're at an inflection point of breaking the resistance above. So we are trying to literally break out. And actually the price action today looks very bullish. Even intraday, it shows like a lot of resilience. If I take you guys to like a macro level right here, you can see that the Dow is making all-time highs here again. So this is very, 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 very bullish. In fact, continuation higher for next week based on what we see right now. Look at the weekly candle. It has that bottoming tail that enforces the buying pressure coming in. And we could expect higher prices if we trade above this high for next week. And on the monthly, again, very nice continuation. So you see this candle and this other candle into a continuational pattern. Yes, we do have plenty of room for the upside. Once again, the target on this is going to be 550 for the Dow for next week and probably for the next couple of weeks. We'll see how fast the price can get there. All right, let me answer some questions. The first ticker symbol that I have here is IWM. Okay, here's IWM congesting into the highs. This is the daily, I'm sorry, IBM. Sorry about that. Okay. By the way, IWM is very bullish as well. So from that point of view. But anyways, IBM propelling higher. I actually did mention that IBM is full throttling higher today because I did look at the market today. We finally broke above the 200 SMA. The price action has been below the 200 SMA since February. So it was about time for the price action to start breaking out. By the way, we are far away from earnings. Earnings are going to be sometime in July. So there could be potential massive continuation for a short squeeze in IWM. The 16. So 316 to 320 is the next target level for IWM. This week has been solid. Last week has been solid as well. This is a great continuation higher. Be aware that if you are in a trade, there is some resistance happening from this pivot high into the 295. So be mindful of that. The next area of resistance is going to be into these prior highs between 318 and 325. So it does have a lot of room to continue higher based on the price action that it has had this week. We can expect a continuation higher next week, contingent on dissolving this pivot high and digesting this prior pivot high. So we will need from the from the daily pattern to hold this low and break above this high. So this is key. This move that the market realized today, and so the move that happened in IWM today is going to be key for the follow through. It's going to be bullish above, and this 200 SMA needs to be defended. So the price should never come back below this level. So if you want to use, for example, because this is a pin trade, this is what I call a pin trade in swing trading. You could take it on Monday above today's high, but wait for today's close. You can place your stop below today's low or just below the 200 SMA. I would do that and look for the targets that I've just mentioned. So this is the analysis for IBM. I was going to say IWM again. All right, analyze on Goldilocks. This is GC. Okay, let's take a look at gold. Gold has been in a very problematic range because gold has been descending. We have the high, we have the lower high, we have the lower high and the lower high right here. And we have the test into support. This is the test into support right here. We have the prior minor support. In fact, if I squeeze the chart right here, you're able to see the whole entire picture and you deserve to see the whole picture. So basically now we're testing the same resistance and we were trading just yesterday into the prior high from October 20th, 2025. That's right. October 20, 2025 laid out the playing ground for gold. It is still very bullish. This is still a very bullish descending triangle, I should say, because we are trading into a massive, massive, massive uptrend. So the line in the sand is going to be a break over 46.30 area. Once we break this trend line, the support is still going to be here. So if you want to trade a swing trade into gold, it's going to be above the trend line and the stop is going to be below the 200 SMA. Now, from the weekly standpoint, things are a little bit problematic here in the sense that we have the 10 EMA and the 21 SMA. I really don't like these areas right here because they could produce rejection. They have proven to produce rejections in price, let alone earlier this year in April. You could see that the price action reacted violently down from the 10 EMA. And my question is it gonna, what are the reasons and does it have any reason to break above the 10 EMA, or is it going to get rejected again from the 10 EMA? So when you take the trade on the daily, of course, you allocate your R, you take the trade, but again, it's not going to be that 100% five-star trade. Okay. So I would say it's a 50-60% chances of success. It's not like 80 to 100% chances. And that's because of the resistance that is coming from the weekly. The pros for this trade is that if you get it here just above 620 or 630, you're going to get an earlier entry. If it starts breaking above the 10 EMA, for example, onto the weekly, come on, weekly. If it takes out this 10 EMA, you're going to have a later entry. You're going to have a bigger risk into it. So you're going to take less size. But again, I don't know. You're gonna zoom out the risk into this trade. I'm gonna sit on my hands. So I trade futures every single day, and I love swing trading more than I do day trading. Believe it or not, I'm really amazing. We just closed a fabulous month in day trading with another month of massive profits from our trading room. And I do watch gold every single day, and I'm not going to buy it. So I'm not going to be a buyer in gold right now. To me, it really needs to prove. I would like to see it, and I'm going to tell you exactly what I wanted to do. Okay. So I wanted to see it break out. I wanted to see it come in and form a higher low right here before it takes off. This is going to be the area that I would like to buy it at, that rotation that is going to happen above the trend line. So I'm not a buyer here. Again, I think it is trying to get a little bit more on the bullish side. It has a very bullish pattern, but I think patience is key right here. Okay. All righty. So next, let's talk about silver, right? Because somebody asked about silver. All right. So silver already broke out. You can see that these charts are worked, right? So we were looking at these charts. We have massive level of support here into the 60. It's a whole number as well. We have the rising 200 SMA, and we have a low, higher low, and another higher low right here that has already formed. It is doing absolutely nothing at this point. So the daily is trying to rotate and going a little bit higher. Silver is a lot more volatile than gold. And you could see here that there is basically no decision yet that could be taken on silver. The only thing that I'm looking at is a potential break of this 79, 80 to 80 bucks. 80 bucks is bullish. Under 60 is bearish. Okay. So under 60 bearish, over 80 could be bullish. So I need to see the price respond to this level before. I don't want to get an early entry, not in this structure. So I really don't like that. All right, let's move on and take a look at Intel first. And again, oil, Tida Vito, I'm going to take a look at Intel. I'm going to give you my thoughts on oil, but my thoughts are worth zero because it's a geopolitical type of trade. Because you have to discuss with the Iran and the US government traded oil. So Intel, basing very bullishly from the daily, is trading above the 10 exponential moving average. It has a low. And if the price action is going to trade above 126.60, it's going to form another higher low. So this is going to become the breakout point that is going to launch the price above this prior high. Next targets above the prior high are going to be above what are going to be above 144, so around 140 to $144. The next extension into 150 and 155. All right, since you asked for it, I'm going to take a look at oil for you. Um, Okay, so oil has been trading into, I'm just going to give you what I see on the chart. Okay, so as far as the trade in oil, you can count me out. I'm not going to take any trades in oil. Day trades or swing trades are off limits for me. So we have a good structure support right here into the $80. This is the new line in the sand. We have a huge mega area of resistance very close to the 120. The price action has started to descend within the base. So this is still a problem area all the way from 120 to about 80. At this point, the price action is coming in a little bit, probably some type of deal that the U.S. is going to make with Iran, or they're going to, agree on some sort of a deal, a peace deal, or whatever it is. If the price action, if the deal goes through, probably is going to take a really long time. But if the deal goes through, you're probably going to see oil back to the 200 SMA, or I would say it should be around $60. That's where oil belongs, to around $60, 55 to $60. But at this point in time, like I said, it's subject to anything that is happening between, it's the friction between Iran and the US. It's going to be very tricky here. So this is my take on oil. I stay away from it. I don't trade it. I don't trade anything that I don't see that I can really generate an income or generate some serious profits in. This is a Hail Mary. So you could have a swing trade in oil. You go to bed, and then the next day you're gonna find out that, I don't know, something happened and you got stopped out of a trade. So, or you got shaken out of the trade and then it moves in your direction. So no thanks for me. It's a hard pass. ATI is the next stock. We have 5 more minutes. Okay, ATI, beautiful breakout. I love this. It has a beautiful breakout. I love the fact that it has a beautiful level of support. This is the daily chart. It also has some really nice resistance, consolidation into resistance. This is also a multi-month break. These multi-month breaks are incredibly, incredibly strong. Okay, so if we're seeing, for example, break into this area. And by the way, if you didn't get it here, you could still get it in here. But if you don't get it, if you did not get in, and if you want to wait, usually the best setups are happening in this format. Let me just show you the format. So the price goes up, don't chase it. Wait until it comes back, and then it does that full throttle momentum for higher. Okay. You're going to have, and here you're going to have a much better risk. There's going to be a risk in comparison to this risk that you need to apply. So you want to take the breakout. This is your entry, or here, a little bit extended, but your stop needs to be below the lowest point of the base. So this is your support. This is your stop. Okay, this is your stop. This is your entry right here. I would rather wait when I see these really huge, huge bases, because Broadcom has a similar base. Okay, Broadcom just broke out. So I typically wait for the break and I wait for the retest whenever that comes. You may have to wait a few days or a few weeks or a couple of weeks before that happens, but it almost happens every time. So that's my take on ATI. Okay, the next one is ACMR. All right, so ACMR, let's take it down, let's take it out to the monthly. Beautiful month, very, very extended. I mean, very extended from support. The support is around 48.40 and it's around 57. And you have the 10 EMA right here. So very extended from the monthly. It had an incredible month, very extended from the weekly. This week was like full throttle higher. I like the fact that the volume is increasing a little bit. It is into an overbought zone here. So if you're not in, just sit on your hands. If you're in, just trail. Your trail stop should be around $76 at this point. So like I said, very extended from support. Support is 71.72, and then the next support is 60, around 60. And from the daily standpoint, is doing a consolidation pattern here. So within the last 3 days, it could be bullish if you want to add to it. Could be bullish over 94.30. And you could place a stop somewhere around the 10 EMA into the trend because it's coinciding with this prior high. Here's the visual that you would need to look for. So this prior high right here coincides somewhat with the 10 EMA location. So it's between 74 and 80 bucks. Let's say 75 and 80 bucks. That's what I see. All right. I have 2 minutes left. Let me know if you guys have any other ticker symbols. I have probably time for one. Time for one. I'm scrolling and I'm not seeing anything else. We did everything. RL. Okay. Ralph Lauren. Love Ralph Lauren. Okay. Okay. So daily chart, very choppy. Let's extend to the monthly chart. Monthly chart, very, very choppy. Here's the deal, guys, with Ralph Lauren, because I've seen this pattern before and I've seen this possible action. Extremely bullish over 392. This is great for a long-term trade. Great for a long-term trade. 392.73 is going to be the breakout. From the weekly standpoint, you can see that this is, again, the breakout point as well. We did look at the quarterly, very bullish. This is congestion here. So the last 3 quarters that has been congesting. So that's very, very good. This is accumulation of energy. And if you notice, nobody was selling because we're maintaining the bottom of the base. So this is very important. We have the bottom of the base right here, and we have the top of the base. This is going to be explosive, just like Broadcom, just like a lot of other stocks that are basing at this point. So ASTS, I don't know if we have time for it.
Uh, Matt's not in the room yet, so yeah, you can keep going.
Okay, thank you. All right, so this is ASTS. Let's take it to the daily, whoop, pull back to the 10 EMA. What did I tell you? This could be a buy on Monday over this high, 121.65, over that. And you could place the stop here below because if we develop a pivot here, this is gonna be good. Let me see if I can trace that for you. We could have a reversal, right? So, yeah, this is very good. So we are trading right now. So if we open here, let's say on Monday, and if the price is going to start to move higher, and if we take this high, this is going to be a buy setup that can point the price higher. So this would be like a really nice buy setup forming here. And it's forming right into this minor support. You can see this is resistance. This is resistance. This is going to be minor support within the uptrend. So this will represent your stop. This will represent your entry. This is going to be the first target. And from that point on, look at higher time frames to determine other targets. But actually looks very good. Very, very good. All right. Any other symbols? Oh, it's going to go into, yeah, it's going to probably go into all-time high. So you're going to have to trace some extensions to find out. But yeah, I love this stock as well. My URL, it is tradeoutloud.com. Thank you so much. And if you're interested in our swing program, we're going to send out the almost half year review. We're going to do the half year review in 2 weeks. And we have some really massive profits that we want to show everybody. So yeah, thanks so much, guys. Thank you, David, for having me here today.
Um,
Yeah.
Matt's still not here, so if you wanna,
Okay, I could just keep on going if you guys.
how about Palantir? Do you have any thoughts on
Oh,
that?
yes. I'm in
Yeah.
Palantir. Okay, in fact, I did send a newsletter out about Palantir. Palantir is heading towards the 200 SMA, finally breaking out. You guys see that I already have some tracings on this chart because this has been on my watch list for some time. It's poised to actually continue into this 200 SMA. Whether or not it's going to do it today or not, I don't know. But this is the next pit stop. And after this, it will get some institutional love because institutions love when the price action is above the 200 estimate. They come and grab it. I actually grabbed it very early on, so I'm just in it already. I love the company. It had phenomenal earnings. It didn't really move on earnings, which was like, what? Okay, so I have a lot of faith in it. Good earnings, good technicals, and it should start going towards the 200 SMA, and if above, it's going to produce like a massive short squeeze. Now, today is the end of the month, and the end of the month came with a beautiful rotation. We are finally trading above 156.25. So that means that the price action may start accelerating into the 200 to 207. David, if you're still here, I just think that they may have the same issues that I had with Zoom. Like I said, yesterday we had
Oh,
problems with GoToWebinar, and I had problems with Zoom today. So I don't know. Something is
yeah.
something is going on.
Oh,
Yeah.
yeah. I just got an email from him, and he said he was having an internet issue. So
I'm telling you. I
he
am telling you. Yes, yes,
yeah.
yes. There's
Yeah.
something going on
I
today.
noticed last night and this morning a lot of things were running slow. Maybe there's a
On my side as well. On
larger
my
issue
side
somewhere.
as well. And I don't know, my computer just went ballistic. It's just showing that it doesn't have any memory. And I have a
Mm.
gazillion of terabytes of memory. So I don't know what's going on. Yeah.
One of those days.
Yeah. Hold on a second. I'll send you. Yeah, that should be the link. Okay. Here's the link again. Yeah, it's the same link.
Oh, Ben, yeah, I think maybe he meant when he was trying to join the room.
Okay.
So I don't know.
Okay, gotcha. And this is from the, hold on, let me see. This is from the swing trading. Okay, here you go. All right, but Palantir is just ready to blast. I have a target on it all the way to this high of 205. Don't micromanage this one. Just have patience with it. On a higher time frame scale, it's super bullish. This is a monthly chart. It's right into a rising 21 SMA. Just gorgeous. It's just, and by the way, this is like like for example, like a cup and handle, we would have to have some price here, but this is the IPO that we had in 2020. So imagine like a cup and a handle. Okay, so it's kind of like a cup and handle. Um, yeah. Jointradeout.com error.
Oh, at least he didn't mean.
Oh, can you click on the link just with the services with the stock swing trader? That's interesting, right? 'Cause that's not working. Okay, but anyways, let me know if you guys have any other ticker symbols that we can look at or USO. Let's take a look at a USO because we talked about oil, but we didn't talk about USO. And in the meantime, I'm gonna give you guys a different link if you guys are interested in our stock swing trading service. Okay, just give me 1 second here. Okay, this is a direct link to our stock swing trader. Okay, so you can see here the reaction. I just wanted to show you the reaction into the 200 simple moving average. So we have this reversal that is happening here, and this is on the monthly. This is very, very strong. Um, it's very technical, which is weird. Okay, this is the weekly coming in. There's still some issues with this 10 exponential moving average. And here is the daily, a lot of chop. It's basically the same type of pattern that we have in oil futures. Leon is asking about tree, TREE. Okay, so tree, this is lending tree and it has a quite a good level of support here into the just about $30. Still trading below the 200 SMA. I'm pretty sure that if you scan, you can find out at least 50 stocks that are better than this. We have a lot of resistance from price action from these highs right here into the $50 and we have the 200 SMA right here. So we basically have a lid. We have a lid from price and a lid from the 200 simple moving average. So we really need to extend above this level to continue higher. If you want to try it here on this rotation, you can. You could buy it here. You could place your stop below 32 bucks. What I'm noticing is that the volume is very, very, very constant here. So that's not necessarily a bad idea. The weekly chart, though, has a lot of issues. The weekly chart is under the 10 EMA, under the 20, under the 50, so it's not going to gain velocity. If you want a trade where you get your entry, and if you want to, have velocity in the trade and not have to worry, take it above these indicators here. So over 50 bucks, over 51 bucks, it doesn't have anything of above. So it has a pretty clear tradable void. So
Okay.
that's just my
Um,
take. Yeah.
Matt's here now.
Okay, good. Welcome, Matt. Okay, so I'll see you guys in the
Thanks, Anka.
trading. Yes, thanks, David. Bye.
All right, Matt, are you there?
I am here.
Okay, great. You should be able to share your screen and get set up now.
All right.
So we've had a bit of a glitchy morning overall here, but I think the hopefully the rest of the day will be smooth. And
Oh,
just a reminder for everyone, uh, I am live streaming to YouTube. So for those of you in the Zoom room, if you have to leave at any point, you can still watch live on Zoom, on YouTube. Sorry. All right, Matt. Uh, are you ready to start?
yeah, I'm gonna just get up the chat quick.
Okay. All right, everyone, go ahead and enter some symbols for Matt.
Perfect. All right, here we are. So five, please. All right. All right. Well, first off, I just want to give a big thank you out to Anka for filling in there for a little bit. We had a little bit of internet issues. I do live up north, so every once in a while that happens. Unfortunately, it happened now. We will take a look. I mean, obviously, markets have been rallying pretty hard. I'm not sure if it was the last time I was here, but we were talking about levels down, in the S&P 500 when they came down towards this 2024 anchored VWAP level earlier, I mean, and there was just multiple forms of confluence for a rally. Obviously, it's really tough to say, hey, it's going to rally off of this level specifically, and then, out to, how many more points higher now? I mean, nobody really saw that coming. You didn't even really have hesitation there at that previous high. So let's get into the charts and well, enough of that quickly. So SoFi, first one. All right. So if you do look at my candles, they are a little bit different. They are kind of momentum driven, and then I have a couple other things that are on here as well. But SoFi, this is actually a name. I was just looking at this myself, and I didn't get in it, which is kind of a shame. I really liked it coming off of this kind of double bottom low here, right? So you had two levels right here. Let's see if we can just find a quick drawing tool, something that goes quick. So you can see you have this low and then you have this low. So, I mean, it's a perfect kind of double bottom base. I was looking at anything from credit spreads to even long premium off of this. I am an options trader for the most part, but in, a name like SoFi, you could definitely trade stock as well. It's not quite as low as some names where it's like an option, but it's a very low dollar name. I do tend to kind of gravitate a little bit more towards stock when they're low dollars versus names like AMD. But yeah, SoFi. I think right now you got about 19.27, $20 here. So this was where you're going to start seeing some resistance. Um, then we can kind of look at it here. You have the 2024 and the 2025 anchored VWAP level. So this will be the area kind of between 20 and 19, 50, where I think you'll see resistance. So that's just the level to watch. To get into it now, you're kind of stuck in no man's land. What was this one off of here? So that's off those prior highs there. So you retook that. That's a positive as well because yesterday's kind of high is where you could have possibly rejected, but we broke up and out of that. So that's a good look, in my opinion. But you are still, like I said, stuck in no man's land. You filled the gap today. And for entries, it's just a little bit tougher here. If you get a retest of that 17 level, that would be probably a decent entry. You'll also have the moving averages starting to curl and run over. So that will also be additional support. I know from my look into this, 15 strike was the peak put. What you would really want to see there is if you're an options trader and you understand that's the most open interest for a put level. And I look really at the forward 3 months, but I do look at the all time too, and they were both about 15 at the time. But you want to see that rolling a little bit higher, right? Like you would like to see peak put kind of move up to that 17 strike. That would be beautiful for a retest. Otherwise, you're going to have really your max gains here right now, without taking too much risk is about $20, 1950. But if you can break out above 20, then you have a lot of upside. So if we can get above 20, you're going to be able to likely get back to about $25. That would be the next level that I'd be looking at on the weekly chart here. You can see it was the kind of structure where we broke down from. So that's where I would be targeting if you get that break above 20. Again, you'll have those anchored VWAPs to deal with. And then on the weekly moving averages, yeah, you have them. I don't look at them as much. Um, Moving averages are more just for trend following, in my opinion, and I just kind of use them in the short term. They're not as big in my analysis, but I do factor them in a little bit. All right. So if there's any other tickers, please put them in. Otherwise, we can start looking at some things that are shifting on momentum today. Um, let's just kind of take a look at some of these. All right. So something similar to SoFi. It's actually something we sold premium on this. Uber, right? So Uber, it's been a dog, been pretty horrible, but again, you got this structure here of a low, and then you had peak put in this area as well. So it was something that we took as a trade. You have a well-defined stop, right? And we sold premium. So I mean, we're kind of like we don't need it to necessarily go higher. So even if we're wrong, as long as we're not wrong enough, we will still make money on that kind of trade. All right, now I'm getting some tickers. So we'll move off Uber. It was just something that I just saw that there was a momentum shift, as you can see by this green candle, and something I was kind of familiar with. All right, Unilever. So it's a name I haven't traded in a while, a good while to be honest. But this here kind of classic is, it's a choppy, maybe you could want to call it bear flag. Um, let's pull out the weekly though, just because, in a name like this, it's going to matter much more when you're starting to look at weeklies. Like this, Unilever is a hard name to trade on a daily time frame, even and it's definitely not a name you want to trade intraday, really. Um, I mean, you're in a chop zone, right? So I guess how I would really look at this, your pivot is going to be above that 58 kind of level, right? You see that's where it's been sticky here on this weekly chart, right? You can see the levels here, support, 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 broke support violent, up to it, kind of, tried to break out, you get a little stickiness here, then you finally get the violent move off of it. Again, you get down towards it, support, support, and then tries to support again, violent move lower. So this 58 level, for some reason, just seems like kind of a pivot. Um, there could be very many reasons for that, but 58 kind of seems like your pivot. So, you can see it's tried to get above it, try to get below it. You don't want to get chopped up. So like if you wanted to be long this and you're saying, okay, hey, we're around 58, it's been sticky. Use this previous low here, 55, as like your stop out level. And you can just kind of get long today, even, I mean, that's 2 points. It's not too bad. I think you're giving yourself like a 4%, 5% stop there, or yeah, 4 or 5% stop there. So, um, that's just kind of how I would handle it. Otherwise, if you want, I would kind of just, you can also wait for another break of this 58. You get back above the 50-day moving average. A lot of people follow that. That's just kind of how, I mean, you have a chance that you'll kind of get wicked out again, right? Like, or, stopped out again. But That is kind of the nature of trading anyways. I just don't want you to get chopped up trying to get in and out on a strict level there. All right, let's go to F. Why is it not moving? All right, there we go. Probably put that in somewhere else. All right. So Ford, I really, really liked. I was talking about with another trader on this Ford move. This is my AYT chart, so I got to add. So we have 1450 level here. When we got this move on that data center news the other day, and I'm just gonna. We got this move right. We went right through this 13 kind of resistance area. Went right up to 1450. You got this pullback, and I said, it's probably a great area to buy. To think about that, you can get AI exposure in a company that had a 5% dividend, right? It hasn't really been out there. You knew people were going to hop on this. And I was just kind of talking to him. I said, if you buy down here, I just don't see how it, I mean, what's your risk really? Your risk is back to 1150. You got a 5% div, so I mean, you're kind of, able to eat some of that temporarily. I just don't see why people wouldn't want to do this. You're coming in, that was, the 2025 anchored view app there as well. Now we're up and out. Um, so hard to buy here because, you've moved so much now already. I mean, start thinking about it. We pull this down. Your move already from that AI news is what, 45%? So, it'd be something I would look for maybe an opportunity to get into. Let's see if there's any kind of weekly levels because I'm gonna guess we're blowing through a lot of them. So if you want to get into this now, even though it's running, I'd probably look at something like 16. You can kind of see it. We can just do this. That's the black. I have it on red, and it's just not as easy to see on this. Um, that would be a level that, hey, maybe we take a look here, see if it consolidates and kind of flags out. Um, just because, I mean, that is kind of huge news for Ford, right? Like, and plus it's got solid revenue coming in. I mean, it's a company that's, not as risky as the other AI plays. So I see why people want this. So that's kind of how I would look at it. Otherwise, I mean, if you're real aggressive, you can just try to get long here and use that 1650 break down as your stop if you don't want to, say, miss out if you think it's going to continue to run. I would rather wait for the pullback. That's just my opinion. Um, Again, like I said, I think the best opportunity was once we got that news and you got that pullback to that 13. Then you could have taken some off at 1450 and see where it went. And obviously, you got the breakout right above it. So if you're looking for closing prices to close out, that half position or something, you were breaking out all the way. I probably would have left it open, just said, hey, we break 1450, we'll take that half off that position or something. All right, open. Because I only have about 10 minutes left. So please, please put some more in here. This was a name that I really liked last year. I was talking about it with a buddy online, and we were talking about. I was like, hey, if you can get through this 6 level at the time, or is this 5? The 5 level, you had a gamma squeeze opportunity. There was a $5 call wall there. And it took a little bit of time. You got a little bit of chop. A name that's very similar to that, I'll show you after, just did the same thing. So Open's been going through a big drawn out, kind of move after that, right? We got that squeeze, but we are coming into a level that is kind of interesting. I was seeing that the other day as well. So we got this, I'm going to just change this color so it just comes off. Here, let's do it in black. All right, so you got this now. You again, a lot like Uber, right? Multiple, structural support here, 3 bottoms so far. You are stuck in a range. So I mean, right now, is your upside, 550? Yeah, I mean that's kind of level. Let's just be honest with ourselves. It could easily sell off again there, be stuck in a range, in a big chop range. Again, if you buy today, you're kind of in no man's land, right? You're in between the two ranges. I would rather be a buyer down here on this turn, right? So whether it's, coming down and buying right at 430, or if you're waiting for something like to see a little bit of a confirmation move, you could have got in around 450 there, from how I'm looking at from like a momentum shift, right? Um, but now you really need that move above 560 to keep this going. You also have the 2025 anchored VWAP level right there as well. So that's your level, your key levels. If you're a long-term investor, yeah, you can buy some here, and if it pulls back, buy some more. But if you're a trader, you're kind of stuck in the middle here right now. Um, Not something I would probably want to put an iron condor on because this thing, if it does move, it's going to really move. But I do like how it's kind of basing here. You can kind of see it, and then if you get the up and out, you'll probably get a retest and then higher to back to about $10. So I would think that this might play out a little bit throughout the summer if you're going to see that. And then once we get some certainty into the fall, that's where you can kind of get these rallies. Or even end of the year. So we'll see. Open. All right. I'll try to hurry. NBIS. And I was gonna say the stock that I'm talking about that was eerily similar to Open was BlackBerry recently. We had this $6 call wall level, or it was like, yeah, I think it was $6 call wall level. We got out and it came back, kept holding the six level, and then it finally ran. We got the big gamma squeeze on it. So that was the one that was similar recently to Open. I expect this might get a fade in it too, but it is a little bit different news than Open. That has news. BlackBerry has news that's tied with NVIDIA and AI because of the architecture that's within your car. All right, MBIS. So thank you for putting this up there. This was for the Money Show, my pick of the year. This and DOCN. You can go there and see their free report as well. And you'll see in there that I had pretty extensive fundamental write up on this as well as technicals. I still love this company. I think it's going to continue to work. If I'm trading it and trying to get in, obviously right now we're seeing it kind of just hold, a 10-day moving average likely here. I don't have that up, but let's see if I have one quick. Uh, here's a 10 EMA, so close enough. EMA ain't gonna matter as much on a 10-day as it is on like 50 or 200. But you can see it's just kind of holding this 10-day move, right? So you're able to buy the kind of the dip there at that 10. If that 10 breaks down, obviously you're gonna see the 20 or the 50 even. For me, if I'm looking to get into this again with some size, I would like to see a little bit of a move lower. I don't know if you get through 200. Areas that would be of interest would be obviously 200. You got that the other day. But then the next big level, like if I got a nice dip on this, that I'd be looking at would be about 170. And then if we get like a real big structural move, I do think, if you get into some summer volatility, there's a chance to get back to 140, 150 range. So hard to buy, today unless you're kind of trading it. Um, Another way to kind of look at it is you can kind of just follow on like a 65-minute chart. This is the 200 SMA on there as well. So you can take that, kind of see how that kind of falls. So once you get above that 200 SMA, you kind of have a nice little bit of a move there. So that's how I would look at it if you're just trying to maybe trade it a little bit. ALAB, because we are running out of time. All right, pull that back out. All right, ALAB. All right, so this is a name I did see a bunch of flow on it. I was a little even skeptical, just because it is a very choppy name that when it moves, but otherwise you get this brutal chop, right? So for options, it's really tough. This is why this is a classic example, I would say, is ALAB. Is when options you can't buy in the consolidation, right? Like because time is working against you. This is the type of stock that really kind of exemplifies that of reaction versus prediction, right? There's a lot of them that you can, buy in consolidation, but this you do not want to buy options. Usually, you want it when it's running. So it is running hot. Um, let's just see, just logical areas that we could start seeing maybe some consolidation or pullback. Yeah, so I mean, it could go straight to 368. That would be the 161.8 fib from that 2025 high to the 2026 low. If you're looking for anything else, I mean, again, really tough, but again, see how this follows kind of the 10-day moving average that we put up here. Um, if you do get a pullback because you are extremely stretched from there, there's a chance right now that 10-day nicely holds. So that would probably, as of right now, that's around the 300 mark. I don't think it'll be there. I think you would maybe get something around 320-ish. You can take a shot, keep your stops tight though, and then see if you can get to that 364 mark. If you're an investor, and you're wanting to hold this a lot longer, again, you would really want to hopefully see some type of correction, and maybe to get back in around that round 300 or even back down to about 262 there at that previous high, and step into it. Because you can see even the 20-day moving averages, at 250 right now. Often when things get this stretched, it's a better short opportunity. And, I'm going to guess you're looking at it from the long side because AI's been really tough to short. Trust me, I've tried it. Um, and it worked a lot better last year, in the previous year, than it has this year, especially, or I should specifically say this rally, right? Like, top fades have not been working that well. Let's see. All right, we have about 1 minute, 2 minutes. So if there is anything else, let me know. We can go over it. Otherwise, let's just see if I can see something and pop it up. All right. I haven't looked at this ticker, but it's been popping up on scanners. Frog, um, kind of a big move breakout. We're above 70 now. I mean, honestly, you get another retest. You might not even get it, but you get another retest down towards that 70 level, could set up nicely. You kind of see you got that consolidation once you got that previous high, and then you got up and out. AAOI. Ooh, I was trading this in the 19s. I've been trading it still, but let's see. All right, perfect. This is a name I used to sell a lot of premium on it as well. Now I wouldn't as much. Different kind of mechanics back then. This was, past 2 years until 2026. Yeah, so photonics, you're coming down to this 50-day moving average. You can kind of start looking at it around 150, 140. Um, I would rather them maybe shake out weak-handed bulls here, right? Yeah, you got large volume here too. You got a large volume kind of, sell volume coming up into this. I would prefer it though if you can get, 130 to 130-ish, right? Like if you can get back into the 130s, even if it's the high, start looking at there. This is the 2025 anchored VWAP level. That will probably be up to 130 rather quickly here as well. That could be supportive. I don't know what the open interest looks like right now on the levels, but I'm gonna guess you're gonna start seeing positioning around that 130 with put sells there. So that's probably going to become a big put open interest level. And then we'll probably, I'm going to guess they're going to front run you as well. A lot of the times they do, especially names they want to be in if it's going to continue to rally. It's not a name I would just blindly get long right now, I guess. Momentum is negative. So just temporarily, short term, not long term. Trend is higher. But I would just kind of watch out because these are the types of moves that, they'll cut your head off and, not to put it in a vulgar way, but they will slice you up, and then you'll be upset. So just pick your spots. I would look for somewhere in the 130s here if you can get a chance, if you're really wanting to get long. If you kind of break down through that 130 and that anchored VWAP level there, it's probably gonna see back to that round 100 just so you know your risks. So, that's how I look at AAOI. I think the trend is higher for longer in a lot of these names, but we have had a great run. We're gonna go through the summer here. We're going to have some volatility, likely, whether that's, in June, July is usually a really good month for markets, or August, September, as we head into those midterms. So just be careful. Obviously we want to continue playing momentum, but we also know, that midterm cycles, even though it's the Trump election cycle, which seems to be a little bit earlier, I feel like we still could have some volatility this summer here. there's just a lot going on, and this market's ran a lot. So I'm gonna guess the other guest is here. So I will
Uh,
hop off.
Sunny is not here yet, so if you want to keep
Oh,
going, you're welcome to.
okay. Well, throw something else in there. All right, I got one. CRWV. I guess we're all having problems today, so it's
Yeah, that's
it's
yeah,
one
this
of
is
those
weird so
days,
far.
right?
Yeah.
All right, CRWV. All right. It's actually a name that I was just looking at for an event style trade. I was thinking about it and I felt like I missed out on it here. So it kind of pulled back to this round 100 level. And you can see here. So you had the 2025 anchored view app is like this kind of rolling higher here that is kind of protection, right? Um, it's choppy. Ugly. For me, it's very choppy. For me, this was a very short trade. I was looking at it for like a 5-day trade. You had the 50-day moving average, and then you had the round 100. You can kind of see here, it's acted as a pivot, this round 100. All right, you got the fake out, back breakdown, and then you got the violent move up here. And I won't even lie to you. In one of our services, so we do like 5-day trades. Um, I think it worked out anyways. Or I don't know. Yeah, because I had other trades on. Um, I had a short. I took a put position here at the 100 mark, and I just got my face ripped off. So I mean, it happens. When you're trying to play against those pivots. I was just looking for a quick move back lower, right, to like 90s, or 87 and a half. Because at that point, I believe that position would have doubled or tripled on the option. But so you're holding this round 100 right now. So, right here, I wouldn't say go ahead and short it. If you break down through the round 100, you could take the short. You do have the anchored view app, but, I mean, the risk is, more on the bulls if you're below this round 100. As of staying above it, I would rather either stay out of it or take a bullish trade. For me, I was simply looking like, hey, can we pull this 100 level? I can get like a double or well, I could get a double. What was it? A double was like 112. And then like I could get a triple triple, so 200% at 118. And if I went higher, I could probably get, 300%. This is a very short-term option, right? So, um, it's CRV is a mess from a financial standpoint as well, I think. The debt is very worrisome. There, a lot of companies fund their growth through debt, but the levels that CRWV is kind of extreme if you start looking into the details. And I don't have it on me, but um, the only thing about that where I would push back, where why we're seeing still very much bullish moves in this, it's Nvidia backed to some extent. Um, so even though they're pushing the limits on debt, you have Nvidia backing you. I don't think Nvidia is going to let it fail, even if it got into a little bit of a debt trouble. They would probably bail them out. Um, so that's why I think the shorts have been kind of tough on this, but it is a good trader. So um, you can see I've had levels on here before. So uh, you could look around this round 100 if you do want to get long. I know it looks ugly and choppy, but not a bad area to kind of like, hey, it's holding. Let's take it, and we can maybe get a move up to 144 if the AI move wants to continue on. If they pivot into some other names, right? Like, because you've seen a lot of these names run and CRWV, it ran, but it didn't run like some of the other names. Like, you start looking at, um, this was a name we traded, UMC, right? Like for a semiconductor. I mean, that ran, that's up 100% since April's lows, right? Over 100%. So, CRV definitely, or CRWV did not get that kind of move, as others did. So, and a good way to kind of look at it is Nvidia here. You have the breakout, maybe. It's holding that breakout level so far. So for Nvidia 212, and again, like I said, can be kind of tied into CRWV. Anyone throw any more tickers in there until our next guest shows? I will continue to go over them. But But yeah, I mean, Nvidia here still holding a breakdown through 212 is probably not good for the market or Nvidia. CRUS. I haven't traded that in a while, but I did look at it not that long ago, and I was honestly last time I probably traded it personally was in the 60s. Um, but I did see that it was up at 175, and I'm like, boy, did I miss that? Yeah, or 150 it was. Yeah. So, all right. Uh, so yeah, so when you're looking at it from like a bigger time scale, yes, huge breakout. We got a lot to go on this. Um, if it wants to continue to hold, you can always come back down and test 150. What I don't like is it's kind of basing here, right? So um, you can try for another close above 175. You can kind of see here we had was it one close above 175. This one was a big fake out move. So again, you're going to want to see a close above 175 if you're going to get this continuation. I don't mind the W pattern, I guess, now that I kind of think about it, but it needs to get up and out now. If not, you're going to be kind of stuck longer in this chop range that is starting to establish. So you can see, 157 otherwise is kind of like the area that you might want to take a shot. That would be an undercut of the 50-day. Not always a bad thing. I see it happen so many times. It fakes out retail traders that are new. It says, okay, we're going to undercut the 50-day. We're going to undercut the 20-day. We're going to undercut the 200-day, whatever it is. And then they rally it right back above. Um, so for me, I look at levels a little bit stronger and then option levels in open interest. So that's kind of how I would play it. If you break below 157, you're probably going to see 147 there. Move right back to that base breakout. Again, nice spot to try to get long. Not a name I would get short necessarily. Kind of choppy, tough for me when I play options right here. I'd rather look for that breakout above 175, the close, 176 there. APLD, that's another, yes, great moving name. This round, so half century kind of mark 50, psychological kind of hits traders sometimes. Yes, fake out. Yes, please remember that term. What happens is they'll break it out and they pull it right back down. They fake everybody out. So what it does is it just shakes people out of that trade a lot of the times. And it's people are playing that breakout move, and it just takes them right back out, and it kind of creates a little bit of a negative sentiment. But you also get it on the downside too, right? Like you get this fake out undercut move, and then they retake it, and that's actually extremely bullish. So just watch for that, especially when you're like placing stops. Like that's why a lot of the times I use mental stops where I mean I have it down on a piece of paper, but I don't set them a lot of times in my machine. I am watching the market every day though, and all day long. I should say that as well because you have those levels. It's just for me, it works a little bit better, and I know stop losses and setting them hard works for people, but you got to give it some play as well. APLD. So this is a name I actually kind of like. I think, if you do get any kind of retest, like on any kind of volatility back into these 40s, low 40s, 42, I think you got to take an opportunity to take a shot at it. It's had a killer move already, but you can see this old support was holding. I do think this could be the established new support. You do got to see this 50-day catch up a little bit. You got the 20-day up there. So that would be nice. If you do get the undercut, maybe into the 50-day, it'd probably be about $38. Right now, again, you're really tight up here, so it might be tough to trade this second. Look for maybe a move back, into that 20-day if you want to take a shot there. And if you have, keep some powder in if you're looking at shares for around 40. That's just kind of how I would look at it. Just because a lot of the times people are front running these tickers as well. So you're not even getting the pull all the way back to the area. And that's not uncommon. It's not like just because it's this market. That happens a lot. So FTI. This is a new one for me. Thank you for putting it on my radar, to be honest. I kind of like it. Um, the way it's trading. Obviously, you have nice expansionary trends. We are sitting at a pivot. So I put that up there. So we are holding it currently. So this was your previous consolidation base, especially kind of you got this post earnings move up, come back down, and then you kind of cupped and then right back out of the base. So this will be acting as a pivot. You can see it actually acted as support on March 30th as well. So we break this level. I mean, you do have 65 with year-to-date anchored VWAP, but you also have probably this level right here. So about 62 and a half. You can see you're kind of getting a little bit of resistance there as well, and that's where we pulled back to post earnings there in March. So with May earnings out of the way, those are the kind of the levels I would look. This is the classic. Let's just, I don't even know what the brush, if the brush has a hotkey, it doesn't. So, and we're going to change that to something so you guys can see. All right. The classic head and shoulders, right? Um, and I'm not the biggest chart pattern guy. I like support resistance levels, patterns. Yes, I mean, I know all of them. I'm a CMT. Um, I've been a CMT since 2018. But, patterns are just that. I mean, if you ever look at the probabilities on patterns, it's like 50, 4% at best on the bull side. So I mean, still you start thinking about that 46% of high tight flags fail or something, so um not something I look too much into. Obviously, this one played out. You broke the neckline at 70. You're back down here to 67 and a half. But again, you're kind of at a level where you can look at opportunities to buy here. Uh, and then this would be like kind of like if you've been in this for a long time, my line in the sand probably would be the 62 and a half level. If you don't want to just play the 200-day game and say, I'm going to hold until that 200-day breaks. But you give back a lot when you do that. So for me, kind of, if I was still in this, you sat through that and you were in it for maybe say like this breakout or something, right? In early 2020 or 2026. Um, right now, that would be my line in the sand. I would continue to hold it until it broke that 62.50. All right, Marvel. All right, Marvel. All right, so this is a name I've sold tons of premium on in the past. I've traded it. It's violent. I've probably traded it better on the put side than I have on the call side. I'll be honest there, just because it's choppy and then violent, right? That's just kind of how it works. You can kind of see right back here, choppy, violent moves. So it's just what it Marvel is. This has been a historic run on it. Um, you're at the round 200 post earnings. You can kind of see we ran up into earnings, and it really kind of wanted to pull back there. So you're still holding the round 200. From a psychological standpoint, people are looking at that round 200 right now, kind of as supportive. Um, and you can kind of see it, right? Like, think about it. Like 198 here, it just kind of, that's that gap up level from pre earnings there. And yes, you got a few dips below, but it keeps trying to hold it. So yeah, Thursday. Look at the big fake out. Thursday faked people out. It looks like pre-market, right? Even on earnings, fakes a lot of people out that were in on earnings in the pre-market. Holds and is back above it. So that's kind of the level I'd be looking at. 198.37. If you think the rally is going to continue on, that's the level I would look at holding. Below, obviously, there's a reason for these people to get scared out. You're back below this gap level now. Um, I would just hold a tight stop. Give it a few percent. If you want to try against 198, that's fine. I think it's ran a little bit. I think the better opportunity would be the short, um, but it's still not an easy short. When I think about it. 183. I mean, that could be the next level that holds. After that 175. I mean, that's if you're playing with the options on Marvel right now, I guarantee that's not much of a move. Um, I'm gonna the IVs are probably jacked up in there. So I mean, honestly, you kind of hope that this momentum fizzles out and you kind of get a push back to those 180s. Those are the levels that you'd be looking for to get long. I mean, the 50-day should be catching up by that time too. So I guess that's how I would look at it. CLS looks good. I've tried this name a lot too, and I'll even say a lot of short-term put trades, but I have traded long as well. So, and I do like the name. It was one of the early runners in the whole AI kind of theme trade. Oh, whoops. Um, let's see. All right, let's move this down. You kind of see here this 350 is now acting as like the new pivot. I can't say I hate it. Better opportunity to buy this morning or yesterday. So if you got in it, congrats. I think it's a good trade from that level. Um, that's what you want to do as a trader is you want to kind of take these opportunistic approaches. A lot of times you'll catch it, right? Like just for an example, you saw this and you're like, oh, I got to get into this, you saw it breaking out or something, got this move at 380. You've went through a lot of chop the last few months. A lot of times just being patient. Look, you had an opportunity to get back into it. Post earnings, it looks like 355. It ran, but then it came back and again, undercut the 50-day, retakes the level. Now it looks pretty bullish. And you even got another pullback. So, um, I don't mind it. I really don't mind it here. Against 350, I think it's fine. I mean, if you're getting into it now, you're a little late from entry, but again, that's probably 10%. So not even 7%. So if you're willing to have a stop that's 7-10% on a stock, still definitely feasible. I do think this is a name that's at the forefront of AI. I mean, it's been one of the first movers. So I think from an infrastructure plumbing standpoint, it's still a good company to be in and trade. So yeah, I mean, could I see it going through 430? Yeah, definitely. Um, so I would just use 350. That'd be my level on this. You got 322. So if you don't want to get into it and you're looking for something bigger, you need this 350 to break down. You need to come back to 260, basically. Right? So, uh, yeah, 250, 260s. So that's kind of how I would look at it. So, but then you're stuck back in a range, but you do have a very defined level. You'll also probably will have a lot more moving averages rolling over. So you would rather honestly have it kind of stick at this 350 level. Any other tickers? Let's see. Here's one I traded. I never kind of got back into it, but I did like these lows. These were kind of the war lows, right? Like we are talking about it on PANW. We do like a playbook of the week, and I was doing it at the time. It was a trade we did in it. Took it post earning lows right here, and it was kind of a war favored mover. PANW. I said, hey, even though everything else is going lower, PANW can go higher because cybersecurity attacks, Iran, um, it just kind of made sense. It was at a big level. It was already hugely sold off. We got this big move, and we were able to get out for, like 200% up here. But it's a name, as you can see, kept holding that 144, and then eventually we kind of got this takeoff move, right? Cybersecurity, AI is not going to eat cybersecurity. Cybersecurity, AI is going to assist cybersecurity, in my opinion. So that's why you're kind of seeing all these kind of just move. And now you're in blue sky territory. So really, can't trade it here, but I was just kind of just trying to highlight so you can kind of see some of the process. CRDO. All right. This is the name. Kind of got sold off when the rest of the AI names weren't really selling off that hard, right? It kind of got sold off with software, which is weird. But um, yeah, you're in blue sky territory. This one again moves big, choppy at times. So you just got to be a little bit you know, obviously you got to give names like this, names that move a lot, that can have a 10% down. You got to figure out a way within your system to have a good stop loss, right? Like using a 3% stop loss on a name like CRDO or CLS, and any of these AI names really that we're talking about isn't going to work. Um, you're looking for 3-to-1 risk reward ratios, usually 5-to-1 risk reward ratios. And, you know, you can't do it with 3% stop on these type of names. This isn't a Procter and Gamble. Um, yes, you can do it sometimes with like a Microsoft, but these names move a lot, so you got to be able to give them room. You always have to act a little bit more like an options trader, where we're looking at like minus 30 to minus 50% losses on the options as our stops, and then our upsides are 100, 200, 300%, right? So you just got to be a little bit open to that movement a little bit more. So CRDO, if you get a move back towards 200, around 200, I think that's probably going to be a buying opportunity. You'll have this 50-day coming up. Otherwise, the next spot will probably be about 175. If you're in it, congrats. I don't like this wicking candle here. Means we could kind of get this pullback, but that could create that opportunity for you around 200. PAHC. And obviously, you want to see like when you get to these levels, how's price acting? Is it acting sticky? Does it slice right through it and continue going? If it does that, you just want to get out of the way, right? Maybe watch for it to retake at that point. PAHC. I am very unfamiliar with this company. Animal Health Corporation. Let's just kind of take a quick look. Cages in development, manufacturing, marketing, animal health and mineral nutrition products. Okay. Uh, let's see. Honestly, again, don't know the company. Past structure, right? Past kind of big weekly kind of cup here. About $30. Yeah, I mean, I wouldn't short it here. That's for sure. Because you're running into a big previous kind of support level. Um, I know it looks horrible. I don't know what the fundamentals are. There could be a reason it looks horrible. Obviously, they probably didn't have good guidance because it looks like the previous earnings and revenue beat, but you're coming to a really big level. You're down nearly 50% from the high. I don't think this is probably an optional name, so you probably can't like sell premium because that's kind of how I would look at this and say, oh, all right, well, I could sell 25 strikes or 27 and a half strikes. And I want to be long the stock anyways, maybe. So I can sell them naked or I can do credit spreads. But yeah, I mean that's kind of your level, right? $30. I would look for it to start rounding out here. You want to get a taste in today and buy a few shares to just keep it on your radar. It's sitting on the watch list. Don't really have a problem with that. I just keep enough that you can kind of try to get your full position around 30 and a half. Um, you know, it's actually kind of an interesting asymmetric bet, to be honest. Do not know the company. Like I said, don't have a huge history. What move would I would look for would be uh, about $36 here, right? So this previous breakdown or this previous support level here, where you kind of see a breakdown and you didn't get a violent move, but that's where it tried to hold on this kind of waterfall. You can see tried to hold it, couldn't hold it, and then you got the slow grind lower. That's where I would look. So about 36.50 is where it's going to trade back to. Um, and that's where you'll say, okay, if I have you bought, and you have like an average cost of $31. So you bought some today and you bought some at 30.55, and that's where it bounces. And you get that not move. Take some off at 36.60, right? Stay in the trade. Maybe it rejects, maybe you're gonna go back down and use like something else. You could use like 34 because 34 was this gap level over here, right? So you'd say, hey, this gap level, we'll use that. If that breaks, then we'll get all the rest and maybe we'll try to rebuy it again at 30 and a half. All right. So, all right. Looks like someone is here. Dave, maybe. If not,
Yeah,
I'll keep
yeah,
going. All right.
yeah. We can stop here.
Yeah. All right. I do hood, but other person's here. Thank you everyone for joining us today. It was fun hanging out for a little extra. Sorry for joining a little late. Like I said, all of us have a little bit of technical issues, it looks like today. So have a great day, everyone. Trade them well.
All right. Thanks, Matt. Thank you for taking the extra time there. Yeah, yeah, a bunch of tech issues today, but that's fine. Thank you for your analysis. And all
Yeah.
right, so
Thanks, Dave.
um, all right, so yeah, just a quick reminder for everyone, I am live streaming this to YouTube. So for those of you in the Zoom room, if you have to leave at any point, you can still join us there. And Pro Trader Mike is up next. Mike, are you there?
All righty. Hello there, David. Timing Research. Can you hear me? How am I coming in?
Yeah, sounds good.
Awesome. Thanks for having me today. Pro Trader Mike in the house. Let me share my screen. Been
All
listening
right.
all morning. Great.
Yeah, we've had
gr-
some tech
Great.
glitches, but
Some tech
otherwise,
glitches, but some great
yeah,
presentations, some good alpha and some good golden nuggets for sure.
yeah.
And yeah, so I'm ready to go.
All right. Yeah, I'm just double checking my setup here. I'm going to start my recording again in just a second, and then you can start. So yeah, reminder,
Cool.
I'm live streaming to YouTube, but all of the sessions are being recorded individually and will be posted to YouTube as soon as possible as well. So, all right, I am recording again now. Mike, you can go ahead
All
and
right,
start.
great. Hello, everybody. I'm Pro Trader Mike, founder of Mojo Day Trading and inventor and architect of the Mojo Code. It's a rules-based algorithm that I've built in the last 6 months. I want to thank David for and Timing Research for bringing me on the show, and any alpha that I can relay to the audience would be my pleasure today on this lovely TGIF. Where do we start?
Um, yeah, Matt wasn't able to get to Hood, so if you want to start with that one, and
Definitely. So let's go to
then
Robinhood. I was just on that application a couple
oh
of
yeah,
minutes ago. Sure, a lot of people were, and it is making an incredible move today. If you see my chart, it's breaking out towards 100, and it's breaking out above this line right here. It's going to do a massive move, looks like, right here, breaking out over that's outer space. There's nothing holding it back from going over. This is the daily chart. Here's the weekly. And that line on the weekly, you could see it's filling in a gap that happened right here when it fell from 110. It gapped at 105, and there's nothing from 105 down to 100. So it'll probably fill that gap in right there. And stocks that break 100 for the first time usually go dramatically higher. Stocks that break 200 and 300 for the first time go even higher than stocks that break 100 for the first time. And that's an excerpt from Jesse Livermore's book, Reminiscence of a Stock Operator, where in the 1900s, He bought Bethlehem Steel for the first time as it approached 100, pyramided the next day at 114, meaning it added 500 shares more. This is page 357 in chapter 17 of the book. It's an amazing book for all you people called Reminiscence of a Stock Operator, the story of Jesse Livermore. And he pyramided 500 shares more, and 2 days later it closed at $136, and he had his stake back. He was one of the most greatest traders back in the day when the stock market started. If you guys want to check out that book over the weekend, it is an amazing read. And that's what I think is going to happen right there. Historical patterns. History doesn't change itself, you know? You look for these kind of historical patterns, and that's what I've been doing for my whole tenure, 13 years. I trade through the even numbers, and he did it, and I see Hood doing it too. What else? What else we got, guys?
Are you able to see the chat?
CMP. Yes, sir. CMP is Compass Minerals. Oh, we got a mineral stock with low volume. Not really trading today on my level 2. Very thin on the left, very thin on the right. I look for the biggest number in the level 2. And the biggest number is an 8 right here at 33, which is insignificant. If it was an 80 or an 800, that's some liquidity there by a Boston Stock Exchange or some institution trading on it. That's where I think it would gravitate towards, is the liquidity. So there is no liquidity signals within CMP. I don't really have an opinion on it as far as a negative one. The stochastics have moved below 80 for the first time right here. They're trending lower. You got a red bar. I don't see much upside. I see probably a downside test towards this 28 or 27 mark for a bounce. I'm not too crazy about this one. There's probably other ones that are much better. How come it's not drawing a line? Here we go, horizontal line. Bam, right there. 27 and change. So that's what I think. People buying it at 32 would put a $3 stop on it at 27. That's where I would probably look to buy it. Take the pain, sell the FOMO. What else? BE. BE. Bloom Energy. Down $15. Not a good sign. Probably should have maybe got out this morning. As a same exact thing that I just said on the stock before, CMP at 30, going to 27, $3 downside. Same thing as this, BE at 300, $30 downside, puts it right here at 274. We may get a bounce here, but it is in a bearish trend. You could see, I'll draw a little image right here. This right here, you can plainly see. Let me just get this back up. So this right here on the stochastics, the one before was just trending lower, about right here at 80 in a negative trend. If this is any indication of what that one's going to do, it's going to make these three, and it's going to come all the way down here, under 20 on the stochastics. So again, another negative stock that I would not be looking to go long. And if I did own it long, I would be helping myself with some insurance, with some covered call writing, and taking in some premium. So if it does go down, at least I make money and reduce my cost basis. And if it does go up, my prayers have been answered, and I don't mind letting it go a little higher and working around the option. So that's what I would do on that particular stock, which is the BE. And it's probably maybe going to come down here and test 250 bucks. That's where I think it's going to go. Rather than go up to 300, I think it goes to 250. You want Stocks in motion stay in motion. The trend is your friend. That, those sayings are there for a reason. You look at stocks like Now, look at ServiceNow. Went through 100 for the first time. This is what I told you Hood would do. Look at what the stock did as it approached $98 through 100. It ripped to 110. It's 123. PLTR, when it went through 100, did the same thing. Now it did it at 150, the mini number. These are the numbers that I trade through, the 50 mark and the 100 mark. That's what I do. Here's another one, AI, through $10. It's now 1087. These are the kind of stocks that you want where the stochastics are above 80%. And you stay in the stock as long as the stochastics stay above 80. I'm not an analyst, and either anybody here or we would be working for Goldman Sachs. Okay. So as long as this stochastics right here is above 80%, the red line, and it is clearly, just hold it. Once it breaks, like here or here, that may be, or here, that may be a signal to take some profit off the table. And if you would have done that here, yes. If you would have done that here, yes. And now again, waiting, it may do it over here. And that's what I gauge. And it does it on all of them. So if you look at BE, you don't want this thing's in the coffin at below 20%. Terrible. CMP, breaking below 80. It was good for a while. If you look right here, let me show you another shot of that one. It was good on its, I call it the rail grind. Right here, you get in line for the skiing. Here's the chairlift up right here. You're on the chairlift and you're off to the races above 80%. This thing stayed above 80 this whole run right here from circle to circle. And that's your take profit. So you would be taking your first part of profit right here on number one, and you got in down here at 28. Same thing before. Look, 32, stopping at 27 for the bounce up. That's I could have dozens and dozens of indicators. SMA, RSI. I've been trading for 30 years. Why do I use the stochastics? Because I feel it's the most reliable. GCT, see what that one shows. 30 Heinzing 36, down $2. It's gonna terrible. It's in the coffin. It's death. It's death. Look. So here's GCT. It's below 20%. It's death. It's probably gonna go below here and suck everyone else, praying, please, no, don't go lower, don't go lower. I can't handle it. All the smart money is shorting it, betting it does break this line, and they're going to cover under here. Under here is your pain. Right here is your pain. You're hating it if you're long. These guys love it if you're long. You're going to get stopped out here. They're going to take your stock. It's going to go back up a little bit. You'll maybe buy into it, add liquidity, and it's a never-ending cycle of up and down emotion. I wouldn't touch this thing with a 10-foot pole. I wouldn't touch it with a 10-foot pole. Doesn't matter what the name of it is, Giga Cloud, Mega Cloud, Facebook, Peloton. It doesn't matter what the name of the stock is. It matters what's currently, where it's coming from and what it's done. I call it the gunslinger. It's a gunslinger mode. What's the next one? Or else I'll show you what the gunslinger is. If anybody wants to see what the gunslinger is, I built it. The Mojo code. This is the gunslinger right here. The HUD. It counts points away on an even anchor of 28,900, 28,850. Right there. 28,950. They're all even. I don't care what the price is in between each of the $25 blocks. It's irrelevant. All I trade is price, and it gravitates towards the numbers. And when it starts 20 points away and goes towards the anchor of 100, 28,900, or 28,950, or 28,850, it continues through the anchor the majority of the time. And this program I built counts it away to the anchor. It's the same way I deal with stocks. This is the NASDAQ futures I happen to be trading. But it's the same exact thing with stocks. I trade to the anchors. Give me the next one and I'll give you some anchors where they're going. And then you can come back to me in a month and say, man, that guy was right on the money. I think he's onto something. SNX. You see this FCX, Freeport McMoran? You heard of that one, Dave? I think it's about to break out above this. Look. And then I'll do SNX. You see this, Dave? Look. See this breakout? Above 68.80 and above 71. It could be up 15 bucks in one day, just like Pelletier is up 13 bucks. You know what Freeport does? Freeport McMoran? Anna? Dave? Scooby-Doo?
Oh, yeah. Yeah.
Good. They're the largest producer of copper in the world today. This is the one. If you like AI, AI needs copper to run in the future and build upon. This is a copper company. I like it. I also like AI, C3 AI. I also like Jet AI, JT AI, ready for a breakout above 10. Look at sky's the limit. This thing moved in one day from 7 to 16 bucks. You don't think it can do it again? I think it can do it again and fill in the upside. Look at BBAI. It just did it. QUBT just broke 10. It's headed to 20. This one day it was up $3.50 a week. You don't think it's going to repeat? I do. This is my group. Let's look at SNX. $257, up 11 bucks. Gotta love it. Rail grind. Don't sell it. Don't do anything until it breaks 80. Look, you're right here, boss. Look how high you are on the STO. You started right here. Enter. Look, beautiful. Do not come out until it does one of these. Until it does this right here, which is a long extension from this whole one back here. Look at this monster move, how long it stayed in rail grind, boss. Monster move. This was from May 1st, right here, to May 30th, a whole month, every single day, riding it higher and higher and higher. Beautiful example. You sold right here, part of it. Maybe sold a little bit more right there. Maybe bought some back right here because you love it. And if you did that, it chairlifted up beautifully. And now you're in rail grind on that last buy and holding it way up here at the top. I love it. I'd put a stop at 250 on it and let it ride. If it goes under 250, it'll make a red down under 80. You could see it. If it goes under 250 from where it is and makes a couple of reddies, it'll do this right there and it'll go under 80 and there you go. If you want to anticipate it now and do a little, never hurts to take a little off the table. That's a great one right there. I like that one. Very nice, Leon. Good job, boss. Very nice, Leon. Very nice. SNDK. I think that's SanDisk. Yeah, SanDisk. 1,682 up 40 bucks. It's in rail grind, but it's tedious. It's I can't even look at the price. It's so teetering right here on the line. Here and here. It really hasn't shown any weakness, the green bars right here are much bigger than all the reds. Look how big all the greens are. Here's a big red, here's a big red, there's two. This is the biggest red right here on the whole history of it, right here, this one bar right there. Let's see how much it moved on that bar. That bar was 123 points. This bar was 150 points. This bar was 150 points. So, like that chewing gum, Big Red may show himself. I would watch it carefully, maybe set 1650 as your stop. Let it ride. But if it goes under 1650, it's going to go lower and make the red under 80%, and then it's over. So it's probably close to being over. I wouldn't get it here. If anything, you're already in right here. And now you're just asking, what is it going to do? I don't see much more upside. Look at the NASDAQ. The NASDAQ is out of control. This is the weekly on the NASDAQ. There's one red bar. One. It's pretty scary. It's through 30,000. How much higher on the upside can it go? Same exact thing, though. The people that are in, look, it chairlifted up. You're in here, which is right here, and you're still in. You haven't let go. Maybe take a little off, but you haven't let go. It's not under 80%. If I would have said that here, hey, it's done. Look, I would have cut it short there. If I would have said here in May, it's done, and cut it right there and gotten out, I would have cut it short. The stochastics tell you what it's doing. And when you get in a trade, watch what it does. Let's go back to that one, SanDisk that I was just showing you. So SanDisk, let's go back 5 minutes, 15 minutes. All right, in the 15-minute chart, you've got it down here, and it's in rail grind above 80% right there. Let's go to the 30-minute. It's in 80%. You love it. So right here, this telltale sign, you stay in the 30-minute chart. The next is the move to the 60-minute chart, and then the daily. So right here, you're good to go. You're good to go. Tomorrow or the next day, it goes high, switch to the 60. It's not in 80%. So you stay in the 30 until this one in the 60 gets over 80, and then you switch to the daily, and that's what it looks like. And you could stay in these things. This one stayed from April 1st to that was March 30th to April 15th. Look how long it stayed above 80. That was your out right there at 950. And you entered right here at 650. 300-point move. That's it. Love it. Look at the next one. A lot of S's. What is everyone in the S's for? $62 down, death. There you go. You could see it. Right here. Where's my pen? So let's draw this one. And this one right here is death. You should have gotten out like right there, which is right here. And that was the end of it. So all the other ones that I've shown you, as it's going under 80, what's going to happen? There you go. That can happen more than going higher. Once it crosses under 80, look right down here as it crossed over 20 and you got long and you chair lifted up into the rail grind of 80 right here and you stayed in all the way to right there. Right there. Look at that. That's all the way up here. And this red bar made it go under. And look how steep it went down. Thank goodness it came back up though, right? But this is death. It's going to go under $60 and head down and test 50. Think it's a good short. Whatever the name of that one was. What was the name of that one? That's Suncor Energy. Good luck. Sounds like Sun Edison when it used to be $60. You remember Sun Edison went from $60? You remember where it went? To 60 cents, then to 6 cents, and went out of business. Remember that one? SUNY, Sun Edison, SUNE was it? That was it. SUNY right here, Sun Nation Energy. I think this is them. There you go. Next. Any others? Look at Ford. Everything's up so much, man. I've never seen anything like it in my life. If you would ask anybody, everybody's wrong. Nobody guessed the market would be doing this in wartime and with the nation as it is and so forth. So I've been trading for 30 years. 30 years. Guys like George Soros and guys that are big shorters every day come in and buy the market back because they're wrong and they're on margin. And it just takes the retail and the mutual funds who can't short, they just buy. That's why the futures go up. Out of 100 nights, they go up 95 out of 100 nights because people don't know how to short. They only know how to buy low and sell high. That's what I think. What's next one? Gold? GLD? Look at that chop. That's going nowhere fast. That's going nowhere fast, guys. See this gold? Look, here's the highway with the lane in the middle. Here's the car. Here's the wheel. Here's the wheel. Here's the guy driving. Right here, driving in my car. Step on the gas, the brake. Here's my wheel. Make it a tank. Add a lot of wheels. We'll add a fin. There's a fin right there on that green bar. We'll add an antenna right there. And he's driving right down the road. Boom, 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 boom. There he goes. Above 80, right in the middle. Woo! That ain't going, no, that's a trader's dream. That's a nightmare. You buy it to go over 450 right there. Or you buy it under at 405 to go under 400. Those are the plays. At 445 to go above 450. Or at 405 to go below 400. There you go. That's the play. Crazy, man. Crazy on that little tank. That's going nowhere. That's going nowhere. So right here, let me show you how it works. A strategy. Load my vPro. Right here. And I pick playback, because we're going to do a playback. And I'm going to enable it. I'm going to hit apply. Okay. And when I start it, I'm going to get the right date in here as a playback. 5/27. Anybody else got some symbols? So it's going to count 20 points away. And it's not going to fire a trade, which is an ATM strategy. ATM 1, 2, 3, 4, 5, 6. Put it on ATM 2. It goes to ATM 2. See, ATM 2 armed. Put it on the chart right there. And stochastics are 0 points away. So it's in gunslinger mode. It has to go 20 points away from that anchor at 30,100. Once it's 20 points away, it'll start to count towards the anchor and fire at 5 points away. It's flat now. It watches from 20 points down to 10. It gets armed from 10 to 5, and it fires the trade at 5 and less. Watch. I'll speed it up. Look, 12. Now it went under, as soon as it goes under 20, it'll tell you which direction it's headed. So it's headed into a short at 10 points away. It's armed for the short at 10 points away. And at 5, it'll fire the short. Six, 5, boom. See, it fired the short automatically. Done. And now you're in the trade. And everything is all automatic. So it slides down, takes number 1 right there, profit, takes number 2. As soon as it takes number 2, the buy stop slides down to break even, and it starts heading towards the third one down there. And the trail goes down with it. It's called the Mojo code. And it only trades. So right now the trade's over. It's got to go 20 points away from 30,100 to do a new trade. And it trades both long and short. And I challenge anyone to show me a trade that doesn't go through the whole number when it fires 5 points away. You show me one. I've never seen one. That's what I built, called the Philosopher's Stone, turning the bars into gold. Not turning metals into gold, but I turned the bars into gold. And 18 points away from a long now, 20 points flat. And that's how my program works. That's what I built. I built the Mojo code. Nothing like it in the world today, people. Nothing like it in the world today. You can visit my chat room for a free chat. Come watch me trade live on the Mojo code every day. It's something you've never seen before. It's a rules-based algorithm that only trades through the anchors of 100 or 50. Attach it to your live account. Show me the trades. Show me the losers. I challenge you. No other symbols. No one's ever seen something like the Mojo code before, people. Come on.
All right.
We done?
Thanks, Mike.
You're welcome, buddy. Thank you for having me. I really appreciated you and your audience. Thank you, everybody.
All right. Yeah. Thank you for being here. So, yeah, I just posted your links in the chat again, so everyone can check those out. And Michael Filiguera is up next. Michael, are you there?
I am.
All right. Great. You should be able to share your screen. Yeah.
Okay. There you go.
All right. Looks good. All right. Are you ready to start?
I am.
Okay. I'm going to start my recording in just a second, and then you can start your analysis. So I'm just double checking everything. All right. I am recording again now.
Hi, everybody. My name is Michael Filiguera. I am with logicalsignals.com, and I am here to take your requests for something that you might want to take a look at. My background, of course, is with Elliott Wave and Fibonacci. And so if you got something that you want to take a look at to see where it might be within a larger structure, or possibly just what's going to be going on now. I mean, we've seen a lot of crazy stuff going on recently, particularly in the semiconductors. And right now doesn't show a sign of it stopping, but the intensity of it and the height that these stocks have reached in a very, very quick manner is just subject to a lot of review. And so we'll see what comes with all of that. Nonetheless, I want to just say that what we have going on continues to follow Elliott. Now, a lot of the waves are truly becoming very extended. And while we're waiting for the next request to come in, I'm going to go over to the S&P 500. I'm going to take a look here at the um, futures market. And this is where I do 2 updates a day. I update once in the morning and then once in the afternoon. And before I even do that, we're going to start right in. And Patel, we're going to go over, well, actually, Leon, we're going to do great. They're come flying in. Okay. PLAB, Phototronics. Wow. They didn't like those earnings. Let's start with that. And that was a really gap down. This is a daily chart. Let me just take this up a little bit more. Wow. I can see why, but boy, that must have been a surprise. Let's look at the daily. Let's go even further and take a look at the 5-year. Wow, it's been around for a while, but it started in May of 2021. So it doesn't have a huge history for trading. But again, I have to tell you right off the bat, I don't know if I'd touch this one. And the reason being is that everything is just like massive. They have massive slides, and they're all coming down in 3. Going up in 5, coming down in 3, going up in 5, and coming down in a big 3. So that's the good news. The good news is as long as we can see that the structure is producing 5 waves up, 3 waves down, it should be building towards that high, which may be more permanent than one might want to think. I know nothing about this photronics, and so I can't speak to what products they produce or what they have in terms of, future, in terms of contracts or anything of that nature. But I can say it looks like 5 up from this level, so it should be 3 down. Now that's the weekly. Going to come down to the daily. You can see we kind of had a 1, an A, a B, and this would be a C wave. And a couple of ways you could try to run Fibonacci on this. You could take it from there. That was a huge gap. There was one gap. There was another small gap there. And this is so we didn't even get an exhaustion. It just kind of went flying down. Not a good picture here. So let's just take a peek at what we might want to look at. Okay, so it's already gone past and continuing 0.618, which is not a positive for this all turning around and starting to come back up. So whatever is happening on, it's coming after a more significant high. And now while I can say A, B, C, it also can be 1, 2, and this is a third, and out of going to be working to 5 down. And boy, you don't want to see this, but it does appear like it's going to at least maybe find something here. It's hopefully finding some right there, which is 3180, and it's very close. That's just previous low. And then you have an additional previous low, same area, 3108, and then you're into the gap. And if they go in and start to fill that gap, which they're just sitting right above, then I would expect they're going to come all the way down and they're going to blow this out. And then they're probably going to work their way to this low. And what that then looks like on, let's go to the 5. Yeah, that looks like, it's not a good picture. I would stay away from this one unless there's puts and you have them from up here, then that's a true winner. Outside of trying to buy it, I wouldn't. You really want to see it to put in 5 up and then catch it on that. You'll get a 3-wave pullback and then look for another 5. But I wouldn't want to step in. This is worse than a falling knife. So that's not a good one, but good to start. Thank you for that. And okay, so Patel, now we're going to look at the Qs, which are one of my favorites. And the Qs, I do have it all charted out actually on a long-term basis because I do the NASDAQ. And so what we're looking for here overall in my largest degree that I count up is a primary third wave. So in the S&P, it's a cycle degree third wave, and in the Dow, it's a cycle degree. In the Russell, I believe also probably going to work out to be a primary because it's about equal in time with the Nasdaq. So being that the Qs have only traded since, well, here it says 2021, but I know they were around before that. Then from the 90s. So I think the Qs, tell you the truth, I'm not positive, but I think they've been around longer than 2021. So, but from that level, this is all the data that I have, and I compare it, of course, to the Nasdaq itself. And with the Nasdaq 100 began trading in 1985. So that's a cash market. The future came on in 1999. So again, we have limited data, but I do my analysis on that cash market. So based on that, we have intermediate wave 3, intermediate wave 4. So this whole move off of the 2022 lows has been an intermediate fifth wave going up. It'll be consisting of 5 waves of minor degree, of which 1, 2, 3, and 4 are done. So from the April 7th low of 2025, we're working on minor wave 5, which will consist of 5 waves of minute degree, which 1, 2, 3, and 4 are complete. We're in minute wave 5, and in very, very typical fashion here, minute 5 is going parabolic. And if you're familiar with my work, I do produce a weekly podcast on, and I include the Qs, but on the NASDAQ and the S&P. But within that, while we were waiting for this to develop and see how it was going to come, I had suspected that if it was to be marked as a minute fourth wave, minute wave 5 would blast off of the low and just really move up and complete itself very quickly. Now, considering that this is March the 31st of this year, it's 2 months, April, May, 2 months. 2 months, this thing has gone from 555 and it has hit a high. I got to come out of this screen. And it's hit a high today at 741. So that's 8 weeks, we'll call it. We'll give it the benefit of the doubt. Say 8 weeks, this market has gone literally parabolic. Minimal pullbacks. So it's a finishing move. That's the other point that I want to make. In the Nasdaq, in the S&P, these are finishing moves. These are not breakouts. They're finishing. And so what happens when we're up here into the price territory that we've never been in before, it becomes very difficult because who's out there to sell? So the buyers and the sellers are basically going to be the dealers, the ones that are making the markets and the options. So in the Qs, prices are controlled, yes, by the underlying of the 100 stocks that are in there, but primarily by the options trading. And so it's very important to kind of put this together and to understand that what we're really dealing with is options. They're incredibly heavy traded here. And so when we have to determine then what's going on with the options. So basically, we're looking at a picture where the dealers are the ones that are making the market. So the dealers, when we have 2 types of atmosphere that we call what the market may be in. One is a risk on atmosphere, and the other is a risk off. When things are in a risk on, and what triggers that is another thing that I use, and it's called a volatility trigger. And the volatility trigger does shift around in its move, and it goes accordingly how another level that I use often, and if you're familiar with the options, you can understand the word, and it's called gamma. And there are gamma positions that get stacked at particular strike prices, and then we can develop what we call a call wall or a put wall that could either be resistance in a call wall or support in a put wall. And when they get broken, it forces a trade. Same with the volatility trigger. When it gets broken either on the way up or on the way down, it changes the overall atmosphere of trade. In other words, if we're coming up and the volatility trigger is above the market and we break above it, then we suddenly get a burst of activity to the upside, then that is the volatility trigger being triggered, and the atmosphere goes from risk off to risk on trading. Well, what is risk on trading? It's where the traders or the firms are selling the VIX, not the VIX, but it's the VIX. It's the future on the VIX. And they sell that and then they take that capital, right? Because you're short now, you get money into your account, and they take that capital and they go in and they buy the volatility of the underlying. Well, what is the volatility of the underlying? It's implied volatility in the options. So if they're buying it, then they're normally going to be buying calls. So what do the dealers have to do there, right? The dealers are making the market in the calls. The dealer has to sell. So the dealer sells that call, and what's the hedge? To buy. So the action that we associate with when a volatility trigger gets broken to the upside is to buy. And so then we know, and now if the volatility trigger is being broken to the downside, right, we're coming down and it's below the market, then it is called risk off trading. It's just the opposite of the other. So these have very powerful reactions when they occur. And I bring that up because what we had here was the Q today broke above a call wall sitting pretty high, I thought, at 740. And when it broke, it shoved the market. This was the first one, and then it came the second one. So it wasn't quite as dramatic as I thought it could have been, but it was more exhaustion because there's the result of what happened after. That didn't work. Doesn't show it the way I want it to. You can see there we have right at the 10 a.m. marker, sell off. And it just kind of, we went up, we went up, we went up on the opening. But what we were seeing is just filing into, let's see what they were still doing. And again, going back to the semiconductors, they were going into Micron. They were going into SanDisk. They were going into AMAT, AMD, Broadcom. There's a whole list of things. We were reacting, or the market was reacting to Dell Computer, which there may be some insider trader things going on there. And so we're not really sure what will come of that. But Dell, when it opened today, it opened up over 100 points from the close yesterday, based on their earnings report that they came out with yesterday afternoon. That kind of fed into some of this spec. And so the market pushed and pushed and pushed, and then suddenly it just stopped and reversed. Now, also today is expiration. So we have a lot of things going on where options are expiring. Well, as options expiring, things happen. Gamma gets expires, so it goes away. We see volatility get switched around. We see a lot of things happening that affect the price. So it's interesting to kind of put that all together and then try to decide what the market is doing. So the long and short of what I've just said, Patel, and anybody else who's interested in the Qs, it is follow the options trade. The Qs, yes, they also are, of course, the ETF on the NASDAQ 100. So it does have a play, but it's what's happening in those 100 stocks. It's what's happening in some of the sectors that are included in this thing. And so things can get out of hand real quick, as we've noticed via Micron. Now, I believe that what we're finishing, I've not updated this yet, so these are not correct, because the 4 will be here, the 1 will be here, the 2, and so we're just finishing a third up here. So we're going to do a small fourth wave, and we have one more rally back up, I believe. Now, I may have to make adjustments here. That could be the 3, that could be the 4, and this puts us in the 5, in the fifth wave up. Now, again, what we're looking for here in Minuet Wave 5, that's the one that's going to be going up, is 5 waves of sub-minuet level. And there, I think going to have to put 1, 2, and 3 is going to have to go here, and 4 is going to go there. And this is going to turn into the 5, of which we have 1, 2. This was the internal third, so maybe that's the whole 4. We have one more little downturn. There's my support, 733-ish, and then we come back up. Now, what's going to be interesting is that I likely can put together some fibs that are truly going to be more dynamic to the upside, like 750, 760, probably even 765, which are possible But unless you're a day trader or you're really nimble and you're in this market all the time, I do not believe that it's a time to go long because we think this is all a breakout. I have the whole myriad of analysts are saying, wow, they're looking for this to really kind of really stay up until the fall of 2027 or even the spring summer of 2027. But if we're looking at it here, well, then we're looking at third or fourth quarter. And can the market hold itself up that long? Sure, it can. Will it? That's the big question. And if somebody's going to go and say, oh, yeah, for sure, we have all these different things coming out, everyone hinged on and wanted to just stick around with NVIDIA. NVIDIA, great, 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 great. And then suddenly, NVIDIA is not as important anymore, is it? Now it's Micron. Now it's SanDisk. Now it's AMD. So, and that's all in the basis that Micron has this super server, which is being set up and really super fast and everything for AI. Well, we know AI is humongous. It's huge. So how many can they sell? How many can they build? And then all of the ancillary, all of the other companies that provide a product that goes into the construction of a server are going through the roof. So what really are we dealing with here? We're dealing with overbought, overextended, just overpriced. It's just like, does that make it a bad company? Absolutely not. I believe that AI will still go. But if we're overvalued, where's the pressure? Pressure's on the company to make trillions of dollars. That's what it amounts to today, folks. Trillions. When you consider Micron on the 31st of March was trading at 322. Look where it is today. Well, you can't because it's hiding there. Hold on one second. It's trading at 956, and these are down ticks. It was higher. I think it has a high up at 980, just shy of 1,000. And that's in 8 weeks. That's incredible. Now, if you're a good analyst, sit down and figure out how much money do they have to make to support that price. That's what it's all about. So it's going to correct. That's my other point. This is all going to correct. And my thoughts are particularly within the Qs and within the NASDAQ itself. And I'll just go over there because I actually do have it. I think what we're going to come back to, I got one more, eventually is this level. And that's 10,044, 10,444. That's where I think we come back to finish primary wave 4. And then we're off to the moon again. So what really people think, oh, that can't happen. It's all the end of the world. It's like, it is not. It is just correcting first this. So you can always monitor it. But I think the first drop will be as quick as it went up, but it'll bring it back to this low. The second one will bring it to this low. The third will bring it to this low. And then we will rally. And then we will come back hard. So I think we go drop, we rally a little bit, drop, we rally a little bit more, we drop suddenly, and then we rally strong. So I hope that fits for what you are looking for. Because short term, I think there's still some upside. Longer term, you're going to want to be situated and being able to play the downside. And there will be plenty to do. Now, if we're going to be a trader, this is what I tell people that I coach, folks. Trade. Let's trade. Don't just think, well, I'm going to put on some puts. I'm going to wait for the market to drop. Why? It's going to drop, go up, and go sideways and all over the place. There'll be so much trading. What we need to worry about is if the money that's floating around in our market being traded, which is pretty huge, by the way, if that leaves, there'll be nothing for us to do. So the conversation would be moot. It's like, why have it? There won't be any trading. Nobody trading the options. Right now, money is flowing massively. That's great for you as a trader. Keep trading. Don't just do one trade. Do a lot of options trades. Play the move, then play the next move. And it's a lot to be done. Thank you, though. And sorry for going on as long as I did. I can only do a couple more because I only get 30 minutes. Okay, Oracle. Oracle's is a tough story because they got on good earnings and the earnings were not bad. The earnings were still not bad, but the market came all the way down. Now it's rallying back up. And if I had to say, it doesn't appear, it kind of appears that it might be an ABC coming up. It is looking pretty strong, but you do this. I'm going to put some fibs on here because this would be A down. This could be B up and we still get a C down. One down or two up, or A and B, one or the other. And right now we passed 382, which for this type of a move is the most common. But if it's a wave, a B wave or a wave two, you got shot at 240 to 265 before it would turn and come back down. And it will come back down accordingly if the markets give up the ghost. And for whatever the reason is, and to tell you the truth, folks, it's like people say, well, what's going to create it? You know, we got enough geopolitical stuff going on. And I know right now everybody's like, oh, yeah, but they're going to solve that Iran war. It's not signed, sealed, and delivered just yet. So everybody goes on the whim and hope and a prayer on that one. All right, let's move on. So Oracle, I think we got a little bit more and then we will correct again. Doesn't mean that Oracle's a bad company. It definitely does not mean that at all. Everything is going to correct. So I'll try for that one, George. But George, you have my email address. Go ahead and send me an email and give me the same thing, and I will do that for you, and I'll send it back. George and I go way back, so that's why I will do that. Okay, we're going to look at FedEx. Wow, look at this thing. Wow, that's a lot. That's great. Somehow it's getting caught in the same thing of like they got to ship everything somewhere, and so I get that. But I think it's getting kind of toppy. If we just look on the weekly, you could see it's never really relieved this extreme overbought, and now we're kind of shoving ourselves. The market is shoving itself back up to it. So I think we may have. Let me just see. This is the 1, 2, this could be a 3, or it's an A, a B, and a C. Let me go one more out on my maximum here. Oh, yeah, it's finishing. Oh, look at this. This rally's been in motion since the 90s. Wow. This is like major, major finishing. And so I would have to compare this to the S&P or the Dow. Because I think like what I could probably come up with, that'd be 1, 2, 3, 4, or this is 3 and that's 4, which was the, pandemic, that fits. And then we have 1, 2. It actually, it's charting as if it has more to go. More to go. Like this would be, if that's like a 4, then it should be like 1, 2. And then 1, 2 of 3, and then a 4 and a 5 of 3, and a 4 and then another 5. So what could I put up there to show? You can start to use, you have two tools. One is retracement, the other one is extensions. And so if I put an extension, because if this is 1 and 2, and I'm going to go here, I'm trying to measure out what wave 3 will look like. And already we surpassed 100%. So wave 3 is already over 100% of wave 1. So anywhere in here, we could start to pull back. But internally, it looks like 1, 2. So on this basis, here's my ticket. That's what I kind of would look for here. But if I take it one step lower, now remember that 507. And let me remove that and then go from here, because this is the internal 1 and 2 of this third wave. And look at that. You see how they both come back into the same area? I'll do it again. So, and I'm watching, David. They come back down. That was 507. Here we have 472. And that would just be for this third. And this is for the upper third, the larger third. So if this is internally, wave 1 of 3, wave 2 of 3, wave 3 of 3, does a small 4, goes back up, does a 5 of 3, comes back down, or does a 5 of 3 up to here. So that kind of goes in line with what I'm hearing, that there are many that feel that the markets will top and then begin to drop towards the fall. So that gives a while longer for everything to kind of just really kind of get up to these levels never seen before. And so I just, and in a lot of ways, folks, I'm not thinking that this is going to last. I think that, but I will share with you my own personal feeling here is that when it is done, it's not just going to roll over, although it can because things are so overbought. I think it's going to be a shock. Something will shock the market, so it'll be undeniably going down, not going to just stop and come back. We will see rallies up and down because please do not forget that when that's happening, think about an option trader and all these options that trade more and heavier than the indexes. Okay, so it's the options that are controlling the price of the underlying and the options controlling the price of the index, not the other way around. So think of the action of what a dealer has to do when you buy or sell a put, when you buy or sell a call. And that's what you're going to be seeing being done en masse. If this market turns and starts to go down, what's happening? Everybody's going to want to get out of these calls that they're long. Everyone's going to want to be looking to buy puts that they didn't pick up. Either side, right? If the dealer has to sell the puts now, the hedge is to sell the underlying or to sell whatever it's on. If the dealer has to buy back all these calls that they had to sell, what's the trade? The hedge is to sell. Now compound that with lots of people panicking to get in or out. What's going to happen? Risk off trading. Boom, we're going to be buying volatility. We're going to be selling that volatility within the stocks, within the underlying. And the dealers are going to have to sell. That's their hedge. They're going to have to sell. So I'm going to kind of keep it right there. And George, please do, because that's interesting. I want to take a look at that for you, and then we'll email each other and talk about it. Thank you both, or everybody. Sorry that we didn't get a chance to do more. And David, so that you have plenty of time to switch out and switch in. Thank you, everybody. I'm hoping, again, I do, I have YouTube channels. They're under Traders Helping Traders, but look for my name. Or you could just do my own name. You're welcome, Zachary. And so again, I do a morning update and I do an afternoon update. And then on Fridays and Saturdays, I do weekly podcasts, and they're on the S&P 500, the NASDAQ 100, gold, silver, platinum. Thanks, David.
All right. Thanks, Michael. Great analysis. So thank you for being here.
You're welcome.
All right. Next up is David Gonzalez. David, are you there?
Yes, I'm here. Can you hear me?
Yeah, sounds great. So welcome to you.
Thank you. Thank you.
So everyone, David Gonzalez is a first-time analyst here on Timing Research. So happy to have him here. But he's with thefivers.com, who I've known for 7 years or so, and they've always been great partners for us and guests. So, all right, I'm just double checking my setup. So
No problem.
I'm going to start my recording again in just a second, and then you can start your analysis. So
Sounds good. Sounds good.
I am recording again now.
Perfect. I'm sharing my screen. I don't know if you can see my screen.
Yeah, I see the site.
All right. And all right. So my name is David Gonzalez. I'm here as an analyst with thefivers.com. We are a proprietary trading firm, and we fund traders to help them turn their passion to a trading career. I'm primarily a futures trader, intraday futures trader. And let's get right into these charts because that's what we're here for. So please enter whatever symbols you want me to look at. I also trade stocks. And then, yeah, let's get into it. I have pulled the crude oil futures because this is for me the elephant in the room. I have a big arrow here showing where Epic Fury started, but I think that even if the war hadn't happened, we were looking at higher crude oil prices. I think we were starting to stair step here from December 2025, kind of into this longer term channel. So, of course, if the war hadn't happened, we were probably going to see higher prices either way, maybe testing those higher 60s or higher 70s uh, around these areas here. But for anybody who's trading crude oil, I think the obvious path right now is down into those 79.80s until we kind of get a change of character in the price. And of course, we have to watch the news, but inverse correlation between the crude oil futures and the equities. Anybody who's shorting right now is happy, and that's probably why you see a big smile on my face. But that's where we're headed for the time being. All right, we have some symbols here. Let's look at deck. All right, haven't seen this one. Interesting. Let's just zoom out a little bit. Look at where they are at longer term. Ooh, all right. So this was 2025. So I look at the market three ways. I ask myself the question: are we walking, running, or sprinting? And I'm going to explain what that means. When we move like this sharply, to me, we're sprinting. Now, if we compare that to a human being, how long can you sprint for? Well, not forever. Now, if we think about walking, you can walk for a longer. I'm sorry. If you think about running, you can run for a longer period of time, and then you can walk for a much longer period of time. So we went from sprinting here to, in my opinion, walking. Right. So we're moving sideways. Sideways consolidation to me is walking. But after we walk, we have to start running again, and then eventually sprint again. So if we look at deck, we are definitely in an interesting area here. We moved down. Let me see how much was that percentage wise. Wow, about 55%. Okay. So every time I analyze a stock, a futures, whatever, I always look at the three scenarios. The obvious one is if we continue to go sideways, well, we'll continue to move the way we're moving like this. But if we decide to run again, you have some key areas to watch out for. And it would be these two right here. And it's always interesting to see a asset trade around the $100 area, right? Prices tend to move higher from there. We just had earnings. They look pretty good. Let's zoom into a daily chart and kind of analyze what's going on there. All right, we are getting into exactly what I thought was an area of possible resistance here around those 118, 120s. So honestly, if I was going to make a move, I would wait to see, okay, can we continue? Because this on the daily chart is what I would consider a sprint. So we're moving up sharply. I would wait for us to continue, get into this 120 area before I decide to make a move. And usually what will happen is you'll sprint, you'll need to take a break, run maybe for a little bit. So that would mean some kind of sideways action for a while. And then you decide, okay, what is going to be the next move? Are we going to continue to sprint up, or are we going to pause and move lower? So I would wait, see what happens here with a consolidation, see what happens with the volume. If we see volume increasing again, like maybe we did here, then we would probably try to aim for higher levels. If we see a decrease in volume and sellers start to step back in, then I would advise you to look for lower levels and probably the mid-range before where we started to sprint from and where we pause. So that would be somewhere around 100, right around that 200-day moving average. So yeah, I think there's definitely a lot of move to the upside, especially with positive earnings. We are heading into the summer. We are changing. A lot of things are changing. We're going to have midterms, but I think there's definitely move to the upside. I think we need to slow down a little bit. We've gapped up multiple times, and then we could push higher, find a little bit of resistance, and continue this rally. Let's look at ARM. ARM. I haven't looked at this one in a long time. It is oh man, this is the sprint. We are pushing higher. Let me kind of zoom a little bit in. Definitely an interesting one to trade intraday. I used to trade this, and you can see my lines here. I was trading this when it was around the 170s and 160s and around the 120s and 116s, which was a while ago. You're talking 2025 and 2024. All right. Let's get into these hourlies and see. Okay. So I think that short-term trading would be appropriate here. We have sprinted, so we moved up. We are resting here, right? And since we've rested, it might be time for us to run again or sprint again. So I think the overall feeling when it comes to the market is that things need to come down. But I think I tend to be a contrarian. I think a lot of people are probably short the market, and I think there's probably a possibility of ARM continuing as well to the upside. It is a tech stock. The whole tech sector these days is very, very bullish. So I think there's move to move up. My intraday trader brain wants to look at this shorter term on a really, really tight intraday chart. Right now, I would not touch this if I was trading it intraday. Would probably wait for this to pull back a little bit more. Go retouch VWAP around this pocket here before I would take it longer. But I think there's definitely room. Let me go back to the 4-hour chart. I think there's definitely room for this to continue to rally. Honestly, things tend to push much higher than the market think they're going to. So I think there's room for this to move higher. How much higher? We would have to see. Let me measure a little bit here. What I tend to do is use boxes to see how many. I calculate standard deviations this way. So 1, and then you would do probably 3. So that's 2, and that's 3. So yeah, I think we could touch those 400s before we get any significant pullback, and that could be into next week. So if you are bullish, I think you could definitely do a play around the 400s and then possibly get a pullback around there. All right, let's look at MSOS. Oh, cannabis. Haven't seen one of those in a while. Zoom out. It's been a while since I've traded lower priced assets. Man, let me see a longer term chart of this. Ooh, all right. We have cratered. Okay. Let's look at this on the daily chart. All right, these plays are always tricky for lower priced stocks. Let me see what the average volume, 30 days, 10 million. Okay, so it's a lower float. Okay, I think one should be careful around these levels here, these highs. The entry really was around this 200 day here around the $4 450 mark. I think there's probably we've again, I say walk, run, sprint, right? Um, we walked, we've started running here, but again, there's a lot to contend with here. Around those 529s, 530 levels, all the way up to 550. So I think one has to be careful here. I would give it some time to see if we get a clearer path. So I would give it a few days, see how the asset behaves if it reaccumulates here before moving up, right? Because I think this would be an area to be cautious around. We saw what happened the last time it touched 550, so we need to be careful around this area here on the daily chart. Let me just zoom in again. My intraday trader brain has to look at a tighter chart. I think you could probably do, if you're an intraday trader, you could probably find an intraday gap up short setup into those 520s below 580, call it 560. So, you know, a gap up short, kind of like what happened here back in, what is it, mid-April. So I don't know if there's any relative news, you know, anything positive regarding this asset. But if you do get, if you're, you know, if shorting is your thing to do, you could possibly find a setup here. But I would be very careful with this one because it's in an area where nothing is clear. It's kind of in the middle of no man's land, right? So anything is possible here. You're getting towards a previous level of resistance. You're pulling back here on the day. We thought we found some strength with volume, but it's hard to tell if this is going to continue or not because this being you know, a low price stock, cannabis stock, if the rally was going to continue, it probably should have continued today and early, right? So I would be cautious around MSOS. All right, moving right along. Open Door. Nice that we're talking about Open Door. I just saw a house with the Open Door stuff. All right. Oh, we have a nice trend going on here. Very, very clear. I'm liking this one. And then we even did the kind of first try to break out of there. So we went way above. We sprinted above the 200 day, right? My 200 is in blue. My 50 day is in this dotted line here. So we sprinted up here, cratered back down. Earnings, okay, after earnings we had a little surprise. We're pulling back, but we've definitely found a clear base here around this $4, call it $4.20, $4.50. So I think this is a nice base, right? It's pretty clear, and we are trying to push higher here. Of course, we have this little area here, this little pocket of resistance to contend with, but we have very, very clear levels to risk off of. So I think this is a good one where you could try to the upside, right? We've tested these levels 3 times, right? We are clearly seeing increasing volume. It's the 3rd day. Of course, we're moving into the weekend, but next week, this is looking pretty clean. Of course, we need to move out of this area decisively, right? Probably here once we reach this, call it $6 area, the whole number where we previously wicked from, we'll be touching the 200-day moving average. We'll probably get a little pullback, but the advantage with that is that we'll be right above this clear level here, right? And this is an area where you could possibly reload for a continuation higher. I think this one is looking really nice. I think I'm gonna even look at it myself and see if I could scale into that. This is a really, really nice setup, in my opinion. And like I tell you, I like to measure. You know, a lot of people use Fibonacci levels, etc. I just like to look at the range of the price and then determine my levels with boxes. Uh, so if we just measure here, I'll call it 2 measured moves. Of course, this would be a long-term play, not intraday play. First test would be around this area, pull back, pull back, retest, go test higher, pull back to previous pivot, pull here. I mean, this is pretty clean. If we get a clear, nice structure, we could probably get maybe a slower rally, not something as aggressive as this, but I think this looks very constructive. Now, if this turns out to be a false breakout and we reject around the $6 area, well, watch out, because here, you know, we would pull back to this support level, right? And then this would probably break and we would have to go and oscillate lower. So again, always have multiple scenarios in your mind. The market moves up, down, and sideways, but this is looking really constructive. Everything looks nice. I don't know how the fundamentals are, how the numbers are on the company, but just looking at the chart, I would call this a sexy chart. This is looking nice. This is looking nice. It actually reminds me of gold a little bit. The gold contract. You know, we have this clear trend here. We found somewhat of a base at previous area of liquidity, and we've tested this level twice. We'll probably get a third attempt here, and if we can break this cleanly, I think it's a pretty good setup on gold. Silver is showing relative weakness in comparison to gold, and the gold to silver ratio is at 60, which means that you know, I think we could probably get a move up. We'll see. We'll see what happens in the next week. But yeah. All right. Let's keep moving along here. All right. Our friend AAPL. Apple. So we've been sprinting for a while on Apple. Had good earnings there where we gapped up from. So we have one gap here. We have a small gap around this area here. Let's just zoom in to the asset. So definitely a level here that's interesting to me. And then here. So I use trends, levels, and then I look at the price action. So the patterns to determine my entries and exits. Apple is showing that it wants to reload, honestly. We've sprinted up, right? So, well, let's call it running. We ran up. We needed to rest a little bit. All right. We'll probably need to calm down. And I would wait and see what happens around the 3. That's a key number. Call it 300 to 303. I definitely want to see what happens around this level. We'll be close to the 200-day. Let me look at this on a daily chart. It looks like. All right. Yeah, I want to see next week what happens around this area here. And depending on what happens here, you can determine what you want to do. So be a little patient, because this is a key area for me. Call it this zone. Right. I definitely would wait and see what happens there. Does the price need to pull back, rest here for a little bit, or do we immediately find buyers here and rally higher? Right. So you would be a buyer here, risking off of those previous levels. I would wait here. If we're able to find buyers with volume, then I would definitely be a buyer here. This is a nice level around 300. It's a whole number. I mean, it's looking pretty interesting, and you would want that to happen fast. You would want that to happen intraday, possibly, or over a couple of days. But yeah, I think definitely you could probably be a buyer here. Now, if this fails, then there's definitely room to the downside. Like I tell you, we always need to look at different scenarios. So if price pushes into this level, doesn't hold for long, retests higher, well, there's room for this to go and move to the 290s possibly, right? So that would be in terms of percentage. Let's see, call it 8 to 10%. Yeah, an 8 to 10% pullback is still healthy, in my opinion, after such a rally, right? And if we look at the past pullbacks on Apple, so let's call it here. What's that? That's about 7%. Let's look at it here. 5%. This consolidation here from peak to trough, about, yeah, it's 2.5%. So if we do want to pull back 4 or 5%, makes sense if we're really bullish, and then a little bit lower, call it 7.5 to, yeah, 10% would be a little bit too deep. So call it 7.5%. I think you could be a buyer. So I would wait and see what happens around this level, what happens around the 300 level, and then what happens around those high 280s. Of course, well, there's a gap here that I didn't see. This is also interesting around 275, but that would be much deeper. A lot would have to go wrong for this to pull back this much. I mean, the market overall would need to be pulling back for this to go that deep. So we'll see, but I definitely think you can wait if you didn't get short already, because this is a pretty clean level to get short off of this peak there. Let me look at it intraday. Yeah, this is selling off. Your entry was right there. Entry was right there. This was nice. This was nice. You had, again, like I like to say, you had your run here, then you had your sprint, and you had to take a breath, pull back. You walked for a little bit, tried to run again, and then you realized, man, I'm too tired, and then you fell back down. So this would have been a nice clean entry, risking off of those highs there for an intraday trade, and I would be holding this overnight, definitely, and waiting to see, okay, can we in the next couple of days go retest those 303s? And once we get here, then I determine, okay, what do I want to do? So looking good here, looking good. I like, but I really like Open Door. Let me go back to this one. Let me look at it again. Yeah, technically this is nice. It's looking clean. I don't know if you guys have any other symbols you want me to look at, but we're looking good here with Open Door. Let me just take a look at copper. I'm a futures guy. Haven't looked at Dr. Copper in a while. You know, they tell you that depending on how copper is moving, it kind of lets you know how healthy the economy is. And we're pulling back on copper. So we've rallied twice. Honestly, when we got to this level here, I expected this to happen. So I want to know, okay, are we going to hold around 625 and continue to rally up, or do we need to oscillate and go test lower? We'll find out. Depending on what happens around 625, I'll determine how healthy things are, right? So watching copper, the idea is what? Copper isn't everything. So depending on how copper is moving, then you can determine. It's a gauge to know how healthy the economy is. All right, we got AIP. Let's look at AIP. NASDAQ. Oh, okay. Again, we've mooned on this. So I'm going to have to zoom into this one a little bit. Let me just take a step back, look at it on the weekly chart. Okay, all-time previous. So it's not having been there for a long time. So this is a key level longer term, definitely. Call it 28 to $30. How high is this? This is 500%. Okay. All right. So we touched that level twice, about $38. So they front ran it before $40. So your next area you're looking at is $33, definitely. As we're pushing lower. So just zooming into the charts. Sorry, let's put this on the daily chart. Yeah, your next area of contention is right there, around 33. Let's call it 33.50 to $33. But there's definitely room for this to go. I think it's probably, extended. So you're looking at behavior like this. Maybe you get some buying here, and if it can't push past 36, then you're looking at this retesting, probably where it IPO'd around 28. So for now, my bias would be short, downside, and then I would wait to see what would happen around this $27 level. We'll be getting close to the 50-day then, and we'll want to find out, okay, can we resume the rally? I don't know what the numbers are, of course. Looks like overall positive. Okay. But yeah, we would want to see, okay, what happens around this level where we IPO'd at. If we're not able to push higher there, then we probably need to go and test the 200-day, which would take a while, honestly. What they do? They're semiconductors. Okay, so this is the whole, NVIDIA semiconductor play. So yeah, I think short term you want to you probably need to go test lower. And once we see what happens at 28, then we can determine if this trend can resume or not. Let's see how much of a pullback that would be. Yeah, 30%. That's a healthy pullback. So I think after this pullback, we can probably resume this rally. A 30% pullback is still very, very healthy. So thank you very much, guys. It's been a pleasure. My first one here. Thank you, David, for having me. It's been a great one. It's been a fun one.
All right. Thanks, David. Yeah. Great analysis. And yeah, thank you for being here for your first time, and hope you can join us many more times.
Sure. This was a great one. Thank you.
All right. Thanks, David.
Bye.
All right. Yeah, so just a reminder for everyone, in case you didn't hear this earlier, I am recording each session individually, and those all will be available on TimingResearch.com as soon as I get them processed. Also, I am live streaming to YouTube, so the entire event is being archived instantly on the Timing Research YouTube channel. All right, so next up is Chris Sayer of BigTrends.com. Chris, are you there?
I am here. Can you hear me?
Yes, sounds good.
Let me see.
You'll be able to share. Set up.
It is not. There we go. Let's go that way. Can you see my Thinkorswim platform there?
It is loading, and yes, I can see it now. And
Excellent.
And all right, are you ready to start?
I believe I am. Just making sure I got the chat up in case people have questions, or maybe you can help moderate that. There it is. All right, good. How you been?
Good. How have you been?
Good. Busy for a Friday, but that's good.
Yeah, we started out with we started the day with some weird tech issues, but I think we're rolling well now. So
well, great. All right, you want me to
I'm
start, or are you doing the intro?
Yeah.
How we doing this?
I'm gonna start my recording again in just a second, and then you can just start your analysis. So
Great.
I am double checking everything on my side again, and it looks good. So I am recording again now.
Hello, everyone. This is Chris Sayer from Big Trends. If you're not familiar with Big Trends was started by Price Headley in November of 1999. That means we're over 26 years old. I was actually one of Price's clients shortly after he started Big Trends. I have a background in the financial services industry, and I've been a part of Price's team for almost 15 years here on the front lines doing presentations like these with David and his team at Timing Research. Again, David, thank you on behalf of Price and everyone here at Big Trends for inviting us. And thanks to each of you for attending and listening. Would love to know what's on your mind. As David said when he first handed it over to me, what we're looking at here is the Thinkorswim platform. We're looking at SPY, which tracks the S&P 500 index. It's one of the most highly traded ETFs out there. This is a daily chart. I've got two indicators. At the top of the chart here, the orange line is a 21-day exponential moving average, and the blue line is a 34-day exponential moving average. Then we have two indicators at the bottom. We have %R, which stands for percent range. And then we have a ADX, DMI plus and minus down here at the bottom. The green line is the DMI plus. The red line is the DMI minus. And then the line that's changing colors in between those is ADX, which just gives you trend strength. And then you'll notice some arrows and words along the different candles, letting you know when %R would get in or out. And then the violet and yellow candles that or arrows that you'll see today indicate movement in DMI plus, minus, and the ADX. But I threw SPY up there. If you've got something on your mind, FET from Leon. Leon, thank you so much. I love when you all are interactive. What do we got here? Form Energy Technology. So based off %R, percent range, it gave a short signal this morning, Leon, with a turn down there. We're starting to get some similar confirmation action. If you look at the bottom indicator, the red line again is DMI minus, directional movement index to the negative side, if you will, and ADX is above the yellow 25 line, so that means that short strength is picking up there. Of course, we've got the 21-day EMA below the 34 EMA here. Let me zoom out a little bit up here. So we've got a lot of downside action there, Leon. Hopefully you're short, or maybe you have some puts there on that one. Of course, everything I share with today is for informational purposes only. It's not a recommendation to go long or short. It's just sharing thoughts on tools and indicators that we use here at Big Trends. Let's jump over here. I'm going to go down names that have weekly options on them while you're throwing names in the chat box here. Here's NVIDIA. It came off a %R long signal here on May 26th. So Tuesday, it came off. It's fighting here with the 21-day EMA. You'll notice that the ADX gray line down here at the bottom is rolling over, indicating a change in direction, a change in strength. You've got the crisscross going on inside the 18 and 25 thresholds of the indicator, indicating a lot of indecisions right now. Hey, Pat, good to see you. Thank you. Pat wants to know about Nokia. Let's look at this one. Riding a nice long uptrend here, Pat. You know, we've got nice movement. We got 21 over top the 34-day EMA. %R gave a buy signal here all the way back on April 7th. And then you see these different arrows, yellow, blue, violet, yellow, violet, blue, violet. It just continues as the ADX indicator works itself higher. DMI staying above 25. Just shows a real strong trend right here, Pat. So hopefully you've had Nokia for a while and you are riding it as it continues to work higher. So we were looking at NVIDIA. Not much going on right there right now. Like I said, it's dancing. You're welcome, Pat. It's dancing with the 21-day EMA. Tested the 34 here a couple days ago on Wednesday. I like these numbers. You may recognize those numbers. They're Fibonacci numbers. I do like the exponential moving average over the simple moving average just because it's more responsive. It's just something I've done. I'm 57 years old, been trading and investing for almost 40 years. Started when I was 18. My grandmother Sayer gave me some money and took me to the brokerage firm. because there was no such thing as online trading back then. Learned a lot. Was a broker right out of college. Learned a lot from that too. Seen a lot of things change over the years and decades in trading and investing. So if you have any questions, I'd be glad to try to answer those for you on things that I've seen and experienced over the years. Here's Alphabet. Came off a percent R signal on Tuesday. It tested the 21-day EMA today. Full disclosure, I do have a long position. I own stock in Alphabet. Have not got out of it yet, but it is getting close to my spot where I would lighten up my position on Alphabet there. You see percent R rolling over. You see the ADX indicator showing the strength in the trend is slowing down and turning down. You see the green DMI plus coming down, testing the 25 threshold, and you see DMI minus, this red line down here at the bottom, racing up. And as of today, let's see where that DMI minus is at 17.64, so it's not above 18 yet. But things, to me, this is a really critical spot for Alphabet if you're a trader. Again, like I said, I'm long Alphabet for now, but very close to exiting the position if we get some more downside action. What do we got here from Zachary? Hey, Zachary, thank you. ATEN. It's not one I'm familiar with. A10 Networks. A really strong trend, very similar to what we saw there with Nokia. When Pat threw Nokia in the chat box, we see a percent R buy signal all the way back to March 6th. And then again, all these arrows that you see are just the ADX DMI just showing continued strength to the upside. Clearly, the orange EMA, the 21 EMA, I mean, this thing's barely even tested it. It tested here on the 29th and the 30th of April, but it's not even testing the 21-day EMA. So I would say, Zachary, hang on to it if you have it. You know, I'm a big trail stop guy. I like using trailing stops to hang on to a position. I am a trend trader, have been. I've tried mean reversion over the years, and that's just a hard concept for me. I am a breakout and breakdown type trader. Oh, you're welcome. Thank you, Zachary, again for the name there. Let's look at Microsoft. Percent R long signal today, and simultaneously getting a early indication of a new trend starting in the upward direction on Microsoft based off the ADX. You see ADX down here turning yellow, getting above the 18 threshold. You see the red DMI diving. You see the green DMI plus taking off. You see percent R took off. So we've got some positive action here on Microsoft. If you were looking to get into it, today may be a good spot to do so. But again, not a recommendation to do so. You need to do what's best for you in your financial situation. DraftKings. Hey, Patel. Hey, Devendra. I recognize you. How are you? Hope you're doing well. So DraftKings. It's in just kind of a choppy holding phase right now. There's no percent R long signals or short signals. We are getting a DMI minus up above the 18 threshold, but you'll notice ADX is below 18, and it's crisscrossing there with the DMI plus. So to me, it's in a basing pattern, if you will. Glad you're doing fine. Always to know you're around and watching, and thank you for being a Big Trends client. So let's go to Amazon. Let's take a look at Amazon here. Percent R long signal this morning on Amazon, but we're not getting the double confirmation with the ADX or the DMI plus. You see those turning in a downward direction. You may want to nibble here on Amazon, but I like the double confirmation action, and we don't quite have that yet there on Amazon. Taiwan Semi. We've got double confirmation here. We've got the ADX confirmation on Wednesday. We got the percent R confirmation on yesterday, on Thursday. My days are all screwed up since we had the holiday on Monday. So we have the double confirmation here on Taiwan Semi. Again, not a recommendation to go buy it. Just sharing with what I see with you guys. Broadcom. It's got earnings coming out, one of those earnings coming out on 6/30. So what's that, Wednesday of next week? I typically do not like entering new positions about a week or so before earnings. If you want to play that game, that's fine. You do see back here on April 10th, we got a percent R long signal and the confirmation of the ADX turning up. And this was a really strong trend indication. And let me share with you why on April 9th. So we've got the percent R and the ADX first level hitting on the same day. That's nice in my opinion. April 10th. 2 days later, I got a stronger confirmation of ADX DMI working higher on April 14th. And then the next day, April 15th, if you wanted to go in a third layer, that's the way I like to trade. I like to layer into my trades. I don't like averaging down on losers. So I like to average into winning positions and treat them a little bit different, each one of them a little bit differently. But really nice trend strength here on Broadcom, the middle of April. As I said, earnings are coming up, so I wouldn't enter anything new right now. How about Meta? Let's take a look at Meta. Meta is in just chop city right now. As you can see, a lot of basing back and forth going on here. Percent R got close to throwing a short signal about a week ago, but didn't get the confirmation to do so. You see that the DMI plus green is now over the DMI minus red. ADX is kind of stuck in between 18 and 25, so no real action happening there. How about Micron? This is a name that's been in the news quite a bit. You can see some nice trend action here with ADX. Finally got a percent R confirmation all the way up here on Wednesday. Also on that same day, you got the first layer of DMI plus ADX confirmation. So on Wednesday's entry, you got the double confirmation here with the yellow arrow on the ADX DMI today, today, the 29th. So today there on Micron. Anybody else have any names? I mean, I'll just keep rolling down the weekly list here. This is sorted by market cap. If you wonder what's going on there, the names are sorted by market cap. But every name that I'm reviewing right now off of my list is has weekly options. Before we look at Walmart, Leon wants to go to GL. All right, Leon, thanks for being active today. Let's zoom out here. What do we got? We got a percent R long signal, Leon, on the 22nd, which was last Friday. But we don't have the double confirmation. If you look down here at the bottom, we actually have DMI minus over top of the DMI plus, which is the green line. So red over green is a no-go for a long signal. So I would say we're in no area to buy right now. If you have the position, Leon, again, this 21-day EMA orange line, you can see it's tested it a couple times, actually 3 days in a row now, and hanging tight there. Zachary's back again with another name. I really appreciate you all being interactive. Makes the day a lot more fun. Speaking of fun, how about bandwidth here? How about Zachary? Hopefully you have this one, Zachary. I've got the ADX triple confirmation here on April 30th. We got a percent R confirmation on May 1st, and this thing's just been working higher ever since. Really strong trend there, Zachary. As I shared earlier, I like using trailing stops. That's where I use the 21 and the 34 EMAs for my trailing stops. All right. Okay, great. What were we looking at? Walmart. Short here, gave a short signal. You can see that here with percent R, went short Walmart on Tuesday. We've got the confirmation with the red DMI minus line up above that. We've got ADX above 18 and climbing, DMI plus the green line diving. So it looks like Walmart is stepping down for the next little bit. Again, not a recommendation to go short or buy any puts or anything like that. How about AMD? Nice strong reaction to earnings before and after earnings. That's what this icon down here is all about on the Thinkorswim platform, letting you know earnings. They report it more than what the estimate was. You can see all that good information there. Percent R went long on April 7th, and then 1, 2, 3 got the 3 nice confirmation arrows on DMI plus and the ADX climbing. We got another confirmation up here, and then you can see we got two more up here, well above the 21-day EMA. I would just ride this thing and keep riding AMD if you're long AMD. Again, for informational purposes only. Let's take a look at a bank stock here at JP Morgan. We've got the 21-day EMA below the 34 EMA. So to me, that shows some downside weakness there. We had a %R short signal that fired on May 20th and then got stopped out the very next day with this little brief pop-up. But now that we've got %R back below the 20 threshold, if we get a little bit more downward action, I think we would get a %R short signal. We do see that the DMI minus is indicating trend weakness or strength to the short side, if you will. Strength to the short side with the DMI minus rising, DMI plus falling, and ADX climbing. When ADX gets above the yellow 25 line, that's really when you have a strong trend, in my opinion. T commodity bringing APLD, Applied Digital. Look at this thing. You all are finding some stocks that have been riding some nice trends here. So we had a %R entry and close. We had another %R entry and close. And then yesterday we had a %R entry. But you'll notice going all the way back to when it started hopping up after this earnings announcement mid-April, you see the green DMI plus line just riding. Tested 25 here. It tested the 34 EMA for a couple days here, and then it just kept rallying back. So the way I use the EMAs, if you're interested, is if I have multiple layers on in a trade. So I've got my first position in, I'll use the 34 EMA as my threshold. Not one close. I like to have 2 days of trading action because you can get action like what we saw here with Applied Digital on May 19th, where it tests this 34, but it didn't close below it. Okay. So I like to see multiple days to confirm that, hey, somebody's getting out. Maybe the trend is over. And then when I start adding in the second and third tier to a trade, that's where I'll use the 21. Okay. That's where I'll use the 21-day EMA on those two pieces of a trade if I have it. So just so you know, if you were curious, that's how I do things. Again, that works best for me. Not a recommendation for you to trade that way. Just sharing how I look at things. So we were looking at JP Morgan. We looked at SPY right off the get-go. Look at that strong trend in SPY. What a month it's been for SPY and the Qs and even the Dow. Small caps have been moving. How about ASML? Again, riding some trends here. Got whipped on a %R signal, as you can see here, April 11th or May 11th through a %R long signal, got stopped out on May 19th, but then through a new %R signal on Tuesday, and this sitting in that trend right now. Hey, Devendra, thank you. Now listen, I've got a position in Tesla. So full disclosure, I own Tesla. So Devendra is asking about Tesla. Let's take a look at it here. You can see %R is up above the 80 threshold. Got a first level ADX DMI action here yesterday. So you can see I added, these arrows show up intraday. So I got in yesterday. Yeah, almost at the top, down a little bit on the position today, but I'm not giving up on it because it's nowhere near the 34 EMA. You can see I've got my alert set at that level to let me know if it gets near that level. So I'm in Tesla. Again, full disclosure, not a recommendation for you all to go out and buy Tesla. Thank you, Devendra, for throwing that out there. Appreciate that. Let's look at ExxonMobil. Let's go to the oil sector. I got whipped on an oil trade either earlier this week or last week. I had a position in Chevron and it flipped on me. Chart looked very similar to like what we're seeing here on ExxonMobil. We had a nice little breakout. It looks like it was going to maybe run. but then everything just retreated. I mean, you got to have stops. I'm not somebody that's going to sit here and try to justify, or as I said earlier, I'm not going to add to a losing position. I've seen that not work over the years. Somebody famous, I apologize, I can't remember who, but says losers average losers. So take that for what it's worth. I have just found it's better to add to momentum than to the upside if you're long, than to add to momentum to the downside if you want something to go up. Now, if you're long term and maybe it's in your 401k or something, then you can do DCA, dollar cost averaging. That's okay. But if you're trading, I don't recommend adding to a losing position. I recommend that your trade confirm to you that it's got some legs and that it's going to take off. How about Johnson & Johnson? I believe their CEO was on CNBC this morning. All right, we're starting to get some downside action here. Now you'll notice percent R is not below the 20 threshold yet, okay? But you'll notice we've got 21, the orange line below the 34, okay? And you'll notice that we have DMI minus turning higher above 25, okay? But what you'll notice also is ADX is all the way down here around 14 or 15. So no trend strength to the downside yet, because ADX can go either direction. And what do I mean by that? Well, as you've seen, it can rise with green DMI plus. It can also ride with a rising DMI minus. So it's a trend strength indicator. And right now the trend's not very tight, or it's very tight. There's no trend established, because you look at this tight formation that Johnson & Johnson has had here, say between 225 and 235. It's just basing in that area. How about the Qs? NASDAQ 100. Look at that, just rolling higher. Flipped a percent R buy signal on April 10th. And you can just see multiple days of ADX, DMI plus just working higher. You see just the 21-day EMA is racing to catch up. So is the 34. But if you're long the Qs, as they are known, use a tight stop, if you will. So how about Caterpillar? That's a name that's been in the news quite a bit. Now you see multiple days below the 21 EMA in here, and it bounced up off of it. Now it's coming back down. You see percent R's rolled over. And here's where you see ADX starting to trend lower, following the trend of what's happening with CAT. You see DMI minus is trying to raise. It's actually above 18. DMI plus has now come back inside of the 25 threshold. So you're getting some consolidation and indecision happening right now. You may say there's some distribution going on. It's just changing hands up here at this level. Let's look at Lam Research. Got a long signal here. Let me zoom out for you. Got a long signal here back last Friday. And then we've got some ADX trend strength on that same day. Second layer add on the 27th. So that was Wednesday. We see percent R staying above 80. We see a rising DMI plus. You see the ADX, as I'm talking about, trend strength climbing, moving higher. And you see the red DMI minus following. That's what you like to see, folks, using these momentum indicators that we like to use. Now it's 25 after, and before I run out of time, I've got something I want to share with you all, if that's okay, with David and his team. Let me throw that up there right now. So to thank you all for attending today's Analyze Your Trade event, I'm going to do something special for you. Again, really appreciate all your all's interaction. So let's talk about it here. If you're one of the first 100 traders to act, then you can get access to a very exclusive coaching series. Now, Price Headley, again, is our founder and CEO. He's a CFA, he's a CMT, he's a chartered financial analyst, chartered market technician, he's a published author, and again, he started Big Trends over 26 years ago. What you're looking at here is a video training, 10 sessions. You see all the 10 sessions listed with today's technical analysis techniques.
We're still seeing your chart, Chris.
Really? Okay, let's try this again. How
Okay,
about now?
now I see it. Yeah.
All right. So again, to thank you guys for attending today, you're going to get access to our technical analysis techniques video training session. You see the 10 sessions there. It'll come with a dedicated email address to reach Price and our analyst team. Okay, you'll have unlimited access. This is not a limited time. You only get access for 90 days or something like this. This is yours to keep. Okay, this is yours to keep. You get access to the slides from each session, so you can download or print it out as you can see there. So 10 video training sessions, $197 per session, retails $1,970. That's going away. Again, for the first 100 traders, you're going to get it for free, ladies and gentlemen. You're going to get it for free when you go to TimingResearch.com/big trends. TimingResearch.com/big trends. David, thank you for putting that in there. I'm going to throw our contact information in there if that's okay. Again, we're here today until 5:30 p.m. Eastern time. If you need something, reach out to our client care team, clientcare@bigtrends.com, or you can call 1-800-BIG-TRENDS. That's 1-800-244-8736, extension 2 for client care. And as we like to say, we're here to help. So go to TimingResearch.com/big trends. Get your access for free to Price Headley's 10 session technical analysis techniques. Now, let me jump back over to the chart here. Let's see. Can you see my chart? Are we sharing chart? Let's go here. Are we seeing the chart?
Yes.
Okay. All right. Any more names before David kicks me off the air? This is Lamb Research. Our signal went long last Friday, and we got the confirmation of a strong move in ADX and DMI up here. GCO, Leon, thank you for being so interactive today. GCO. They've got earnings. Oh, they came out with earnings today before the market. Estimate was for minus 250 a share. They actually reported 218, a negative 218 a share. Went percent R long on Wednesday. It went ADX DMI first layer long on Tuesday. But like I said, I wouldn't have gotten into this trade that close to earnings. I've just had mixed success over my almost 40 years of trading, playing with earnings. Okay. But if you're long it, I would hang on to it. Again, it tried to test the 21 and 34 today, but as you can see, it bounced right off those levels and actually is moving higher from where it opened. So to me, that indicates strength. But if you notice down here at the bottom with the DMI plus and minus and the ADX, they're all kind of like a big jumbled mess. So to me, there's a lot of indecision going on right there. So if you're long it, be careful. Use some nice tight stops on that. It is 2:29. David, are you ready for me to jump off the air, or you want me to go?
Actually, Jeff is not here yet. Oh, wait, here he
Okay.
is. Yeah. Yeah, okay. Yeah, we can stop here.
Okay. Thank you, David. Thank you, everyone.
All right. Thank you, Chris from Big Trends, for being here. Let me be sure to hit that link and get that free course from Big Trends. Or give them a call or email. All right. Jeff, are you there?
I am here. Sorry
Okay.
to be showing up at the last minute. Hopefully nobody
No problem.
realizes that.
So,
Just having a little trouble getting in for the last 15 minutes. But yeah, I'm here. I'm
oh,
excited.
you were having some tech issues too? Yeah.
No, they're human issues dealing with the tech. So I
All right.
can't. Yeah.
Well, yeah, we've had a bit of a day already with a variety of issues. So that's fine.
Well, I've had more than normal number of people say that they've had trouble getting into my Zoom meetings, and I don't know why. That wasn't. Look, my problem was I had to look up the email. My email needed to come up, and then everything. No, it was just.
Oh, okay.
I wasn't worried at any point because everything was going fine. But I didn't want to be last minute. But I
Okay.
am ready. I'm excited.
All right.
As we're talking, I'm pulling up the screen that I want to share. And then however you want to get started, I can get started.
Yeah, you should be able to share your screen now and get
Okay.
whenever you're ready. And
Let me get the screen that I want to share. And now I can close something. Sorry. Let's do this. No.
oh, and while Jeff is getting set up, just a reminder for everyone, I am recording each session individually, so the individual sessions will be available later tonight as soon as I can get them processed. But I am also live streaming to YouTube, so there are a few people watching live on YouTube. For those
Very
of you
cool.
yeah, I started doing that just a couple of months ago. So yeah, the full day archives instantly to YouTube. So as soon as the event is over for the day, there's no lag between when I can get when
Oh,
we
that's fantastic.
end the day and when people can start watching the archive. So, but I still do the individual recordings as well.
Oh man, you have always been on top of the tech. All right, so while I'm pulling up and getting my screen to share, um, let me make sure I can see the Zoom responses and I can ask some questions and we can get some stocks that people would be interested in. Um, so just to get started, as I'm pulling up my screens, my thought process is to first close the window. Sorry, I hope you couldn't hear all those landscapers as loudly as I could. My process here that I am prepared to go through if we don't have stocks that people want to focus on specifically, and perhaps even if you do, is I have a way of looking at the markets. So in the spirit of being able to analyze stocks that anybody gives me, I'm going to absolutely analyze them through the lens of something that I refer to as a prime method. And so prime is just an acronym, PRIME, for the 5 things that I will strongly suggest that whether you're just starting as a trader or you've been doing this for 50 years, I've been doing this for over 35 years, and I've been looking at stocks. I've traded commodities, I've traded futures, I've traded currencies, I've traded options. I love 0-day options. So I've traded a lot of different things, but at my core, I really enjoy the process of finding great stock trades. Great stock trades is something that is applicable whether you're trading an option for a quick hit over a couple days or a leap over months, or you want to trade leveraged. Now you've got leveraged ETFs on individual stocks, but Prime is an acronym that suggests that if you can identify stocks that have these 5 criteria, then you have the opportunity to identify stocks that have the potential to make huge moves. So right now I think you're looking at my TradeStation screen. I'm going to give you a different TradeStation view, but what I would like to do is pull up a list of stocks that I call fat pitch. Oh no, you're looking at a different screen now. Sorry. I want you looking at the bigger screen, right? Now you're looking at a screen that has my desktop because I just moved, right? And that's, I want you to be able to see this screen. All right, so now you should see my trade station screen. Yeah.
Yes.
All right.
Yeah, that's what I say.
All right. So I have with this framework have a list of stocks that we go over in our membership areas on Fridays, which I call fat pitch stocks. And so a fat pitch in baseball is when the pitch is basically lobbed right into the strike zone so that the batter can just crush it. You can see it coming. It's not a difficult pitch. You know it's going to be right in the sweet spot, and you can just whack it right out of the park. So if you think about that from a trading perspective, a fat pitch trade for me is a trade that you don't have to react quickly to. You can see it coming. You can set up your entry, your risk, and then you can crush it. And crush it could mean different things to different people, but ultimately, if I'm saying it's a fat pitch trade, I'm coming from the perspective I was just describing, which is you can ride this thing for a long time with the stock, with options, or trade in and out of it. So I will start by, if we would like, looking at some stocks that you guys want to look at. And then I'll also leave it up to the audience, since this is really an opportunity for you to ask any questions about the stocks that you want to see. I just feel that it's more worthwhile for you if I first give you this preview of why I'm telling you what I'm telling you. All right. So I see a couple stocks in here, KTOS, the SPY, ALRS. And let's start. Can I start with the Qs rather than the SPYs? And I'll explain that first. Does that sound good, David? Does that sound good to all of you now that I can see you on my
Sure.
other
Yeah,
screen
go for it.
and I'm
Sounds
set
good.
up? So the idea, I'm not going to start with this. Let's start with KTOS. And I'm going to start with KTOS because I want to look at it from the standpoint of Prime. So Prime P, the first thing is price action. So I'm going to define a situation in price action that is just simple and extremely effective if that's how you want to determine the trend. And so the simplest way to look at the price action is by looking at what the price is doing relative to the 50 and the 200-day moving averages. And I'll also layer in the 10. So on my charts, the 200 period moving average is the green, the 50 is the blue, the magenta is the 10. Now, if I were to look at Kratos, I always call it Katos. If I look at Katos from the perspective of Prime, I want to know when's the best time to get into this thing. And so if I'm just looking at the P component, the best time, the easiest time to get into these things is when the trend is strong. When is the trend strong? When the price is over the 50 and the 50's over the 200. Now, there's a lot of nuances that could be built into it, but let's just keep it really simple. Strong trend would be right in here. It would be over here. You might think right here as well. Right now, the price is bearish, right? The price is under the 50, the 50's under the 200, and the slopes for the most part are either flat to down. Now, the second part of Prime, though, is how do you know when the price action is actually going to continue versus reverse? How do you know that if the stock is breaking out here, you should trust it, but you shouldn't trust it here? So that's where the other factors in prime come in. The R is relative performance. And that the answer to that question, or the definition of that, is your stock performing better relative to the market? That's the way professionals will look at it, right? When you listen to all these people talking heads on TV, a lot of times they'll talk about market leadership. And that's because the stocks that are leading, the stocks that are doing better than the market, that if they're doing better than the market, then mathematically they are just stronger than the market. They're likely to go up faster, up farther, and down less when the market goes down if they're truly leading on the upside. So that relative performance is important. Now, the way that I look at relative performance, or we look at relative performance here at Market Gauge, is with an indicator that we call triple play leadership. Now, triple play leadership is similar to relative strength, not RSI, but we've also got a moving average here, two moving average actually, but I'm going to focus just on the faster moving average. And what you want to see with relative performance is it doesn't have to be at highs. You can have stocks that are coming off their lows and be leaders. They're just leading in a time frame that is smaller than, say, 52-week, which is where a lot of people are looking for relative strength lines to be breaking out to new highs. All good, but doesn't have to be that way, and not always the best. So the simple criteria for me for leadership is the blue line, the fast one, over the red line. If it is, then I have good leadership. Now, after leadership, you want to know in prime is institutional support, institutional accumulation. And that is represented by volume, not volume bars, but a volume trend. And I have volume trend here that's formatted the same way as the leadership, so it's easy to read. Same thing. The blue line is a short-term one-day measure. The red line is a moving average. If your volume trend is getting better, then your blue line is coming over your red line, and that's a good institutional accumulation metric. Now, the next one is M, and M is for momentum. And momentum, I could go on for a long time about momentum, but we're going to run out of time if I do, so I'm not going to. We have one indicator looked at on two different time frames called real motion. We're the only ones that have real motion, but what real motion is measuring is how the market is performing relative to itself historically. So you've got relative performance, which is telling you how the stock is performing relative to the market, and your momentum is how is the stock performing against itself. And momentum is a form of acceleration or deceleration. And momentum has its own trend. It doesn't always have to be going up or improving when price is going up, and vice versa. But when it is going up at the same time price is going up, then you've got a momentum going higher and price going higher. That is a much stronger force. Now, the great thing about momentum is it often moves before price. And so what I like to find in a great trigger is when momentum has already changed course and price has not, right? So in KTOS here, when we measure momentum, again, to keep it simple, if the dots are green, it's bullish. This momentum is looking at the momentum on the 10-day moving average versus the 50. And this momentum, same indicator, different time frame, is looking at the 50 and the 200. So Patel, I think with Katos was your question. So the short-term momentum here looks good. Now the 10-day moving average is already beginning to get over the 50. So this is the beginning of a divergence. Now we'll see divergences in other examples. It's way too early to call it a divergence that you really want to buy into, but over time, this will probably diverge and you will have a setup where you'll be able to trust the breakout. All right. But the longer term momentum just isn't there yet. It's not green. So I would expect this is going to pause here, might pull back. If it breaks out, not really the best one to trust, but it's getting there. But I would say it's getting there because our triple play leadership looks pretty good, right? That one looks decent. And if I go to the volume also looks good. So from relative performance and from volume performance, it's beginning to look good. So if this breaks, first momentum will start to show up, or has already started to show up green. So that's a positive. And this is probably going to turn green too if it breaks. So if I were to say right now, and now that you understand the technical factors, now the last factor, the E, is expected growth. That we're not going to talk a lot about here because I'd have to go to look at some fundamentals. But the theory behind that, or the reason behind that, is if a stock has people that really expect it to grow, then you've got a story that people can latch onto. And I don't think that I need to say anything more than if something has an AI story right now, everybody loves it, right? Unless if it's an AI destruction story, then everybody hates it. If it's an AI constructive or growth story, everybody loves it. And so that's the power of having great expectations for the future. So Katos at one point, I don't know, I haven't followed it recently, but at one point it had a great growth story, right? It's in defense and tech, and everybody liked it. So if we go and look at my other charts, we can look at the earnings, and you'll be able to tell. But so if we break this down quickly, now that you know all the factors, I'd be looking at the price action, as I said, not good. In order for the price action to look good here, it's going to have to take out the 50. Do I think it's going to take out the 50? Actually, it's got a pretty good chance because relative performance and volume both are pretty strong, and momentum is beginning to turn, but momentum's still on the longer term pretty heavy. So it's not the best looking breakout here. And I would actually prefer that it didn't break out and the momentum got more time to get to where it will break out. And the reason I'm saying that is, and I'll show you in a second, is because when you have everything that really lines up, a break of the 50 can be explosive. I don't think this break of the 50 is going to be explosive. Now, if we go back to here where it looked like it was going to bounce off this 50, I would have been doing the same analysis and say, okay, well, what does the momentum look like? Well, the momentum's bearish. In fact, the momentum here, the dots, the 1 day, are under their 50. I don't expect this thing to do very well. And the shorter term momentum, the moving average is hard to see here because of my charts. Let me pull this down. Sorry. Give it a little bit more room. So as this is on the 50, this is red. And when this breaks to the upside, this doesn't get back over the 50. This doesn't turn green. So as soon as this comes back under the 50 like this, I know, to whatever extent anybody can know anything in this business, that momentum is headed down. Momentum is headed down. Relative performance has been weak. It didn't really recover. Volume didn't really recover. This thing, the break of this 50 needs more time. All right. Now, if we were over here and it's breaking the 50, now this is green. This has been green for weeks. This has been positive for weeks. This has been moderately positive for weeks. So can you see how everything looked different? The price action, I don't know if you would say this price action looks any better than this price action. I probably, before I was looking at Prime, would say this actually looks better. You've got a positive slope on the 50. But now I would say that might look a little bit better. But the things that move before price are already positive. See, the problem with this is that the things that move before price, momentum, they've been heading down. And they're already in a bearish situation, right? So if you look at these three situations, this one is kind of in the middle. But you can still find them that come up and look great. Look at Crowd. So we watched Crowd for a long time. So this is Katos right here, right? It's trying to get through the 50. This is starting to turn green. This is looking green. Volume looks pretty good. It doesn't quite get there, right? And this turns a little green, but it just doesn't quite get there yet. Comes back down, spends a little bit more time, and now when it crosses the 50 this time, this has been green. It's turning up. This has been green. This has been over the 10 for a while, and all we need is a little bit of relative performance, and this looks pretty good. So it wasn't here, it was here. Now going through the 200, where now the price action looks good, and everything is lit up, right? Everything and this would have been a fat pitch trade, right? This is us. When I say us in the member area, when I'm looking at it saying, it's beginning to shape up here. This is the SaaS apocalypse. This shouldn't have been punished by the SaaS apocalypse, but it was. When is it going to recover? Well, it's going to recover when all the prime factors come into play, and you can break out of a resistance level where you can set your stops and targets, and it's going to explode like that. All right. Now, I will get to ALRS in a second, but since this has taken me down this path, one of the fat pitch trades that we've been watching for a long time is going to do the same thing as Crowd just did. Actually, I didn't realize it had broken through today. So if you look at Oracle coming through its 200, I think it has the same situation, a very similar situation as CrowdStrike did, which is it has gotten punished for good reason for its debt, but I believe that when it gets over the 200, there's going to be some good news that I have no idea what the good news is. I wouldn't be surprised if it has to do with the administration giving Oracle some contract. Larry Ellison and Trump are best buddies. And now, if it gets good news, look at this, has been bullish for a long time. This, which is hard to see, this is a divergence. This is what really set this up. The red line, the magenta line, 10-day moving average on momentum has been over the 50 for, at this point, a month when it breaks the 50. That's a 50 break that I want to buy. The momentum has already turned higher, right? We don't have that in KTOS right now. This is a big divergence. And so that makes for a good breakout there. And now breaking the 200 with the momentum, everything being positive, it should continue. And it's set up, like I said, in a way to just catch everybody by surprise. And I don't know what the news is, but I'd be willing to bet that there will be good news on this, and the result will look like this. All right. Now, the other thing about this that makes it a fat pitch trade is if you look at the weekly charts. Remember, I said you want to be there on time. So the Oracle weekly chart, when it hit the 200 week, I started looking. When something hits the 200 week and it has a strong trend and it has a good story, that's the first criteria. And so we've been watching this for all this time saying, I'm waiting for this thing to just turn around. Just to give you a sense, it wasn't just Oracle that did this. Microsoft at the 200 week. IGV at the 200 week. So when everybody was saying IGV and all this, the whole SaaS apocalypse, we were saying, but wait a minute. If this is going to turn around, it's going to turn around here, and all we have to do is wait for these prime factors, which we look at on the daily. And so here's IGV. Someone texted me today and say, "Oh, they're buying software today," and I'm like, "Okay, they've been buying software for a long time. Just hasn't been popular." So here's the divergence here again, the moving average over the 50, not over the 50. And so now it's breaking. I don't think this is going to go up like CrowdStrike, right? Because this has a lot of different stocks. Oracle's a special situation. But my point is Oracle's in this group. Microsoft's in this group. So we look for the stocks in this group that have a better E on the prime part. All right, let's look at ALRS. Does this whole prime thing make sense, guys? I know I've only got a minute left, a couple minutes left. So ALRS looks great. Long-term momentum looks good. Short-term momentum looks good. Good performance relative to the overall market. Volume looks good. Now all you have to do is look for an opportunity to be able to set up the trade. If I look at the weekly chart, this could be a good area for it to pause, but overall, I'm going to say on the daily, it looks good. I tend to want to have a good, solid daily level as support in my trades, and that often includes a moving average. So I'd want to see a pullback to the 10 area, but really I think the big support here is 27, and 27 is too far away with a 63-cent ATR. So I prefer to be pretty much within 63 cents, 75 cents of 27. And so that's what I'd look for in terms of a pullback to say really quickly. Now, getting to the SPY, which was somebody else's question. The relative performance here is we usually use the SPY, so this isn't really going to work. But volume looks good, momentum looks good, momentum looks good. So when this was breaking out here to new highs, it was a gimme, right? When the war was, people were worried about the war and ceasefire. Momentum had already turned before the ceasefire. This was one of several indicators that I was looking at and saying, look, the market's done with the war. We bottomed here. It doesn't matter, ceasefire, no ceasefire, it's done. We're either stopping going down or we're going back up. Ceasefire was just the catalyst that took it off, that made it take off. If you're going to look at the SPY right now, and I'll end with this, David, when RSP, which is the equal weighted SPY, broke out here the other day, that was the signal. That combined with TLTs that stopped going down and started to turn up, told you that the market was more than just the semiconductors, and that should give you the confidence that SPY should continue, but also give you the confidence that pullbacks in the SPY, so long as RSP holds up, are pullbacks to buy. I know I'm out of time, so I will leave it at that. I see one new message.
All right. Thanks.
Yeah.
Thanks, Jeff.
Thank you.
Great analysis. Thank you for being here.
My pleasure.
All right. So everyone be sure to check out marketgauge.com. And thank you again to Jeff for being here.
Yeah. And if you want to learn more about this, like I said, marketgauge.com, right at the top of our page, there's what 3 stocks are going to run now. And that'll send you down this path.
All right. Sounds good. All right. So we have 3 more sessions left. And Doc Severson is up next. Doc, are you there?
I am here, Dave. How you doing?
I'm good. How are you?
Oh, pretty good.
All right. You should be able to share your screen and get set up now.
Okay, let me try it again. Okay.
Okay, it's loading.
All right, there we go. So that's, thank you, David. It's a joy to be here again, especially on a Friday. So again, my name is Doc Severson. I am with ReadySet.trade, 12-minute trading, and ReadySetCrypto.one. I've been trading professionally now for 20 years. It was in January of 2006 that I mailed in my 2-week notice and walked out the door. All right, so I'm going to be looking for your questions here today. Let's see if I can find the chat room. It just disappeared on me. There we go. Okay, so let me bring over the charts, and I'll start with the S&P, and I'll wait on your requests. Okay, looking at the SPX, what I tend to do is let's go ahead and I'm going to get my magic pen going here. Leon, you want to look at is that OIL or OLL? Okay, so again, what I tend to do is with the charts, I split things up into fractal timeframes, the monthly, weekly, and the daily chart. And the only study that I really depend on is what's called the choppiness index. It shows the linearity of the trend. And you can think of this as a fuel gauge, like full, and down here is empty. So when we have an extremely linear trend, tends to take a lot of energy out of a market, similar to if you wanted to climb a mountain, if you wanted to just sprint up the side of a mountain and try to summit in one day, it's going to take a lot of energy out of you. Most people can't handle that, are going to have to wait out, consolidate, rest and restore, and then go again until they run out of gas, rest and restore, and then finally finish out. That's how markets move too. So we look for linearity in an extreme, and that's what we have here in the weekly chart, is we're staring at what could be another, well, a couple of weeks of just rest and restore. That could be a sideways move. It could be a pullback. Or if we're going to see any upside movement, it's going to be very gradual. It's going to be very incremental, kind of what we've been seeing here this week. This week has not been all that strong. It's been just sort of, stair stepping in a way. Okay, so that's what I'm seeing on the S&P, and especially now we're seeing a daily chart exhaustion as well too. I'm looking for a pause, not necessarily a pullback, not a reversal, but just a pause. Just a market that is going to just chill out for a week or two. And this may be a good time for that to occur. All right, I'm going to look at OLL.
I think it's OII is
OII. Yeah, I didn't find any OLL. Let's try
it's
OII.
some kind of
That's oceaneering.
Like undersea manufacturing something.
Okay, cool looking chart. Okay, nice. We've actually had a nice rounded base here, which is breaking out above 30. So I do like that. So the trend right now on the monthly chart, we don't care about what was happening a couple of years ago, but in the monthly chart now, we're seeing higher highs and higher lows. As we get into the weekly chart, we're seeing some good movement here. Now, this was in exhaustion on the monthly chart, but it's doing the hard, tough work of consolidation over the past 3 months, and that's allowing it to restore the energy. So what I'm seeing on the daily chart here is your good old ascending triangle pattern. And typically what we'll look for on that is the open end of the triangle is your measured move to the upside. So we're looking good on energy across the board, with the exception of the monthly chart is a little bit impaired, but it looks like the trend is relentless. And I would look for a break above 40, and that should go for about 8 points until it hits exhaustion. But this one, OII, looks pretty good. Leon. All right, next up, ARCB. ARCB from Zachary. What do we have here? We have a monthly swing, but that looks like, since it's gone above the lower high, that looks like the beginning of the next monthly trend. We have a lower high and a higher high. I'm sorry, a higher low, higher high, setting up in the monthly chart. So that looks good. Now it's approaching exhaustion, so you might anticipate a little bit of stubbornness in the meantime. We're also seeing exhaustion on the weekly chart and on the daily chart. So this would be a good time for this to kind of like rest and restore, back and fill, reversion to the mean a little bit. But right now the trend is very strong, as we're seeing this week and even to some degree today. But you're starting to see that just sort of, it kind of walks in place. It's kind of like treading water here. That's what you'll start to see. Let's see. How did we do on earnings? Not that great, but it's restored after that. Okay. Who's next? What tickers do we have next? Till I see the next one, I'll just go into the NASDAQ here. This one is extreme. We've had 2 straight months in a row. Very, very strong movement. And now we're at a level where it's almost into ridiculousness. Now, we've seen this before. If we go to the end of 23, beginning of 24, we had a very similar move here. And then all that did was just 1 week to the downside was enough to get this thing out of exhaustion. And then what you'll see is that the slope of this move slowed down into this move. So a slower slope like this. Okay, Pat, I see Oracle and I see MOS. We'll get to those in a second. So that's what may happen. We may see something similar to this. Or if you go back a little further, we went to, I'm going to go back here to the end of 17, beginning of 18. Okay, we got into another move like this that was into massive exhaustion, and we earned ourselves about a 10% haircut at that point. So I'm not anticipating one of those, but it could happen. Only those come along. Now, again, kind of like what Jeff was saying before me, that I don't think the market cares about Iran and about the Strait of Hormuz. So I think that's already, whatever is going to happen there is going to happen. It's already been priced in. Market doesn't care about that. So looking forward right now and seeing a lot of opportunity. Okay, let's go to Oracle for Pat. What's happening with Oracle? Okay, Oracle had a bad few months here. Earnings were not great back in the fall, but a lot of things got destroyed back in October. Mid-October was a big surprise. A lot of things happened around the same time. It was spurred on by Powell saying, no, I don't necessarily feel like cutting rates. And that was a big surprise. And then a lot of the AI earnings back then were not as stellar as expected. So we had a little bit of a hissy fit on a lot of these former high flyers, like Palantir was the same thing. So we don't care about that though. What's going on now? Nice higher low on the monthly chart, enough energy to power the next trend. Here's the weekly swing, and it's getting closer to exhaustion, but it still has some left to go. Getting above the 200-day moving average is important, and that's causing a big squeeze right now. Now, what I would anticipate at this point is that we see a move like this, little high and tight flag, as we consolidate gains up near 220. I mean, the momentum's strong, and it could still bleed off this energy a little bit higher for right now. It could coast a little bit higher, but ultimately, I would expect to see a little flag here at some point. But otherwise, looks like a good reversal in Oracle. Okay, MOS. What is this? Is that Mosaic? Indeed. Okay, so what are we doing with Mosaic? Now, the first thing you have to look at with Mosaic, and Mike, I apologize if you currently hold this, but I'm not going to probably say what you want me to say. Look at where the market is going and what's going on with Mosaic. Are they going with the market or against the market? Now, what is going to happen to Mosaic if the market turns down, the overall market turns down and goes into correction or some type of corrective behavior? It's not going to be pretty. Probably Mosaic is not going to just magically start to rally. So right now, Mosaic is telling you it's in a monthly downtrend, weekly downtrend, daily downtrend, everything. Big rejection at 80, and that was back in 2022. It is not revived from that point. So this is a good example of what is low can get lower. So I will not own any asset that's not in a weekly uptrend. And that typically a cheat code for that is just the 200-day moving average, which is in green here. So if you can't read trends, so all of these are weekly downtrends. It started to go into a weekly uptrend here with a higher low, but it printed a lower high, did not form the true weekly uptrend, and it failed. So I would wait for weekly uptrend and price above the 200-day moving average. you're short. You're trying to decide to exit or wait. Okay, well, that's better news. I would determine a target. I would determine a target for this. I don't know where you're short from, but this is what I tell everybody on any kind of investment is determine your exits before you enter the position, because we don't get any smarter once we're in a live trade. All of a sudden, all kinds of crazy thoughts will go through our brains and it will betray you. You'll probably end up making the wrong decision at the wrong time. But good move on your part being short with this one, but I would definitely get yourself a target. Now, from an energy perspective, I don't see anything from a technical perspective that tells me that this is turning around. Now, we do have a move from a lower low to a higher high in the daily chart. That could be the beginning of something happening, but we'd have to see what kind of volume is there on the up versus down. So, Mike, get yourself a target or maybe scale out. This is typically what I do is like, I don't know what the future holds. So I will scale out part of the position. Ideally, you break it up into thirds. You take the first third off at a very modest target just to be able to clear the position. So no matter what happens, you don't lose money. And the second third is where most of the heavy lifting goes. So that's usually the measured move target. And then the third, I will run through just a trailing stop, like a parabolic stop and reverse. But breaking it up into thirds is makes it a lot easier. It takes the emotions out. Short from 34. Okay. Sweet. Right off the lower high there. That's good. That's a good move. So, yeah, you don't want to put your stop up at 32. You don't want. So I would break it up. Break it up. Break it up into different, maybe right now is a good time to take off the first third and then go for something a little deeper, but understand the trend at every time frame. Okay. And Christina Jones, CRCL. Okay, what do we have here? What kind of a trend do we have here? It's gone from a higher high to a lower low, and so far this is nothing more than a lower high. What's going on with the weekly chart? Weekly chart has gone into sideways. And we went from a lower high to a higher high. That's good, but that's just a higher low, lower high, trendless right now. So CRCL, who are these guys? Circle Internet Group. Yeah, it's just kind of walking sideways. It's in the process of, it's not very old. It's only a few months old. So it just started printing a 200-day moving average just a couple of months ago. But right now it's kind of under the spell of a larger downtrend at this point. This is where I typically will do something what's called a Darvas box. So I don't know what the trend is here. I think the trend is down. But what I can do is I can let the price tell me based on this is a higher low, so that's good. But this is an equal high, so there's no trend here. So for the uptrend to continue, this would have to break out through this level here, which is what, 140 or thereabouts. Otherwise, what I would expect to see is the downtrend continue by breaking down through this low, and then that confirms the downtrend at a larger time frame. But right now, the overall direction, the tide is going in this direction, and everything else is going to be influenced from the smaller time frames on down. So certainly, Christina. So Patel has got a question. Devendra Patel has got a question here about when do you exit any stock? Well, let's see. What's the best way to answer that question? I will do things generally based on price action and measured move targets. And my way is going to be a little bit different than your way or than anybody else's way. So part of the answer is you need to come up with something that makes sense to you, that you will follow. So just blindly following some other dude's strategy and exit strategy probably won't work for you until you determine and borrow and experiment with ways to do this. Because the whole game here, the game changer for anything, is all about capital gains. And capital gains, if done correctly, is far bigger than income. So for the past 20 years, all I've heard about is income, 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 selling options, income. But man, when you get this part right, capital gains, when you use the wheel strategy right to lower your cost basis to the point where you don't care about the outcome of a trade, if you've dropped it enough where you don't care about the little wiggles that happen, and if you have a general uptrend in place, like here, like HUT is a good example of this. So HUT, this thing was in a rounded base, finally broke out of that rounded base. Fortunately, I had a low enough cost basis that I was able to withstand this dude here, this little snapback. And then part of what you can do is the depth of a rounded base, it becomes your measured move target. So my initial target on this was the depth of the base extrapolated or appended to the breakout level. So that was about 40 for the first third. Again, breaking things up into thirds, I think, makes it a lot easier on your, if you've already got a profit locked in on the position, you're not going to be losing sleep at night. And that's really what I'm all about, is finding a way to invest where it's just, you're taking the easy path. You're allowing the market to dictate your actions. And again, to me, rule number one of risk management is to determine your exits before you enter. So when you look at something like this, say, okay, the price could go up, it could go down. Again, when you're investing in something like this, you don't know this. You don't know where this is going to be. All you can see is this. You can't see the future. And so you're not going to be able to see what potentially is out there. Everybody becomes a much better investor looking in the rear view mirror. So splitting it up into thirds and coming up with objective ways to take the first 2/3 off, and then adding something like a parabolic SAR. Let's see if I have that chart somewhere down in here. No, I don't. Okay. Well, anyway, you can look at that. Parabolic stop and reverse is a really interesting way to be objective about maybe trailing a stop on the final third. That's one way that you can look at this. So right now, guys, the hot play is former Bitcoin or crypto mining companies that have realized that there's no money in that anymore, or very little, and are converting and pivoting very quickly over to supplying, as they say, pickaxes for the miners and building data centers or providing data center services, whether that's power. And this is like, I have two neighbors, they're both engineers that work at a company called GE Vernova. And I was wondering a couple of years ago, like, wow, these guys are completely rebuilding their house. They got all brand new cars. And I didn't know why until I found out who they worked for. But GE Vernova builds turbines. And so companies that can't get the power to run the data center will go basically, the lead cycle in these things is years, but they will go buy their own turbine and generate their own power as long as they can get natural gas. So it's companies like this that are doing well. Who else has a ticker that they want to look at? Now, this one's a good example of something where we don't want to be chasing after this one. We have a monthly chart in exhaustion. Apart from the fact that it's $1,100, but if you have the capital, you can sell against it, and these are extremely rich in premium. Makes a very simple trade. PRGS. Let's look at PRGS. Thank you very much. Who are they? Progress Software. Uh-oh, it's a software company. Okay, so what you have to look at is Progress versus the IGV. IGV is bottomed. Progress is not showing anything of the site. PRGS. Not keeping up with the rest of I don't know what software they sell. I don't know anything about this company, but right now what I would look at, not knowing anything, and sometimes that's the best thing to know, is nothing. If you just look at the price itself, now what is the price telling you? We have a lower high, lower low, monthly change in polarity to a downtrend. Okay. And that rule number one says, of fractal energy says that larger time frames dominate the trend. We would look for rule number two, the reversals, to come from the smaller time frames first and then propagate higher. That's not happening though. That is not happening. So we don't have any kind of reversal happening here. Now, there is a potential reversal here with a higher low, and it looks like a higher high. You could make the case that this is reversing. But like I said, I want to see a weekly uptrend with higher highs and higher lows. I want to see institutional capital chasing after this thing. I don't want to be the only guy out there trying to establish a bid for this. It's not going to work. So Leon, don't care for this one. This one seems to be in trouble. Progress is not making any progress. And you can probably check their demise. Their demise all started back here in a year ago, last June. Earnings, $1.01 versus $1.04 actual. So they blew away the short term, the bottom line. Nice job there, but something happened. Okay, Zachary is checking in with BTSG. BTSG. And I have about 4 minutes left here before I transition over. Oh, well, look at that. Now there is an angry looking candle. Wow. That is called a supply demand imbalance. And this once again shows that I don't care what technicals that you throw at something. If there is a supply and demand imbalance, doesn't matter what the technicals say. So don't short something like this that's on a tear. I mean, would I chase after this? No, I wouldn't. You've got exhaustion on all three time frames. So some type of what you have to worry about with charts that look like this is what's called the hairy back. That is called the hairy back. Parabolic uptrends can end up with a hairy back. So be cautious of that. Momentum is great. One way to deal with this is find the highest value area or the strongest value area, which is right around here at 40. There's a lot of volume at price there at 40. And can I sell a put option there at 40? Well, there's no liquidity here, but maybe I could get the midpoint for $1.15. Maybe if I'm lucky, I can get $1 out of this, but that's still a 2.5% return on capital for the next 49 days. So it is possible to chase after a high flyer like this with a cash secured put and still find a way to make money, as long as you get assigned at a value that you'd be okay with. So the thing here is that, let's say you're at about 2 minutes left. The thing here is that even if this comes screaming back down to 40, more than likely, if it did that, it would bounce up to a lower high before continuing the downtrend if it did have a really bad problem. So that's one way to chase after that. But I never, ever chase after the highs with a direct purchase. Okay, real quick, CRM, which is Salesforce.com. And I'll try to do this in 30 seconds. Well, we got a monthly downtrend. We got a weekly downtrend. We have daily chop. A lot of energy. That's the problem here. A lot of energy for this trend to continue. But right now, Salesforce.com is not in a good place, right? The rest of the software industry, IGV, has been ripping for the past few weeks. CRM, Salesforce.com is not. So I would say they are in trouble. Okay, no other questions. And so what I'll do is I'll wrap it up there. And again, just remind you guys, my name's Doc Severson. Do my work at ReadySet.trade, 12-minute trading, ReadySetCrypto.one. You can check those out. And Dave, back to you. I've enjoyed it. Thanks for inviting me. Thank you, everybody, for your questions.
All right. Thanks, Doc. Thank you for being here.
You're welcome. Have a great weekend, Dave.
Yeah. Okay, there's Jim's logging in now. Okay. All right. Thanks, Doc. Yeah. So we have 2 more live sessions for you today. Jim, the option professor, is up next, and then Harry Boxer will close out the day for us. And Jim, are you there now? Hey, Jim, if you can hear me, you're...
Yeah,
Oh,
I'm right here. Are we
oh,
ready to
okay.
go?
Yeah, sounds good.
Okay, let's see if I can share my
I'm
screen.
fixing my setup here. Okay.
Boy. Oh boy. Hold on a second here. I don't know what the heck. Maybe it came from here. Oh. Mhm. Okay, I had a screen up here and then it disappeared on me. So give me a second here.
Okay.
And let's just go to where I can get this thing set up. Where are you here? Okay. Okay, now I can drag it on over and hit share screen, and then I can hit one of these things like that. Hopefully it'll open right up. And are you seeing what I'm seeing? And is the screen too big or too little?
Yeah, if you might want to zoom out a little bit.
Zoom down, make it smaller like this.
Yeah.
That's pretty good.
Okay. Yeah, that's good.
All right, let's switch the old thing over to here. And we will get started.
All right.
Okay, we all set?
Yeah, I'm recording again now.
Okay, good afternoon, everybody. It is Friday afternoon. I'm Jim, the option professor, and we are supposed to analyze your trade, and possibly I will share some of the ideas I have as well to try to give you some insight on what I'm seeing as well. If you do have any stocks you want to take a look at, you put it in the chat box and we will get to it. Right now, I'm just going to give a rundown on what's going on here. We've had some pretty good fun here in the last 2 months with these stocks going up, and lately, The ones that have been down have soared in price. And of course, as a call option guy, that is a very exciting environment. So I'll show you some of the stuff that's been working for what I've been doing and looking at. And so I'll share that with you in a minute. But let's get a rundown on what's going on in the market. Right now, we're up about 16 points on the S&P, and we're up near that 7,600 area. And guys like Tom Lee are thinking it might go to 7,700 and then have some type of a correction. So we might be at the later stages of the rally here, but I don't see much evidence of it. So I'm going to show you what I see. First, obviously, my moving averages are all pointing up. But what's the problem? The problem is that you're very far away from the moving averages, which is called potential reversion to the mean. And it happens to everyone. So bottom line is that it will be happening at some point. But right now, there's not much evidence of it. If you look at the RSI right here, it's at 78, and then we got a brand new high, and the RSI is at 73. That's not that much of a divergence, nothing to write home about. Let's talk about the 1 month situation. And over here, you were at RSI 72, and then you went over here, and the RSI was at 62, and now you're over here, and the RSI is at 67. That is a little bit more of a deterioration of momentum. But again, none of the lines are pointing down. And until they start pointing down, betting on the downside is a rough racket. And anybody who's been trying to bet on the downside, you can see since March, has been getting their head handed to them in a very, very steady fashion. So what's my point? My point is I can hear that it might be getting near a high point. I hear that this 7,700 number might be it. So obviously risk management, if you got options that you bought for a couple of bucks that jump up to 15, 20 bucks or something like that, you got to make some adjustments on the positions or let it ride and just hope that, the thing, if it does turn, will turn in a very orderly fashion. At any rate, let me show you some other things that I'm seeing. And this has been very helpful to me to stay bullish and don't worry about it. And that is the VIX. Now, you can see the VIX has been in a downward slope here on the 1-year graph ever since, since April, right? And so obviously the VIX has been telling you that the volatility is coming out of the market and people are going to become more and more and more and more complacent and comfortable with putting their money in. That's exactly what's happened, right? So this has been a very good thing to let me know that the volatility is coming down, which generally means the markets are going to be rising. You see all this stuff up here? That's when the market is tanking. You know what down here means? That means people are putting money in, and big money is putting their money in. So again, that's why we keep going. Of course, the earnings is a story, and the darn things were up about 30% year over year. They were looking for 17% or 12%. So this is a blowout earnings quarter. And so that's the reason why the thing's going up, and valuations are thrown out the window because, again, people are referring to the CAPE ratio because it's above 40 for the second time in the last 100 years. But, we haven't seen this kind of trillion and trillion dollar, what do you call it, spending of CapEx where they can write off the whole thing, I guess, in the first year. So, I mean, they set up the tax structure to get all the free cash flow from all those hyperscalers and get them to roll that free cash flow right into what? Into spending. And then also they're borrowing money. More money has been sent out in debt this year than all of last year already. So the bottom line is that they're borrowing money, they're spending money, and it's a real panic. And what's the panic? Well, if they turn the government over with the House, 5 months away, some people may start saying, 80% of America doesn't own stock. And they may start saying, 80% of America can't afford these prices and they can't, they got to do something about that inflation or whatever. So, the things could change. And of course, the friendliness of pay no tax and write everything off, that may have a limited shelf life if the government changed over a little bit, meaning that the House or the Senate started to reverse over to the other party. So that's why I think there's a big panic here, because there's clearly a panic. You wouldn't have to be a genius to figure that out. A panic to get this thing done, to get these things built, to get this stuff gone, to get these laws passed, a big panic. Anyway, so what's the CBOE thing telling me now? It's telling me that, this is a neighborhood that is very, very low. The lowest it's been on this drop is pretty much, I think, today at about 1530. And you can see that is a very low area. This one's going back 20 years. So can you see in the last 20 years, it's generally been, the lows have been about 14. So that goes back to 25, so 14. And then, of course, in 24 and 23, the numbers dipped into 12 and 13. So when you're at 15, you're certainly within shouting distance of the low on the VIX. And when you're at the low on the VIX, it is not impossible you're at near the highs on the stock market. So that's something to consider too. But again, nice to get a little evidence that the prices are going down before you jump out of the boat or before you start considering the sell side. With regards to so that's the story on the VIX. We're way down into the lowest area. 12 to 14 has been the lowest that we've seen in a long time. And again, so keep an eye on that indicator. The other one is the percentage of stocks that are above their 200-day average. And this one could be telling us that we could explode to the upside and we could see a broadening effect, but that's not exactly what it's showing us. So this is a little caution flag. You see, this is the percentage of stocks above their 200-day average, right? And can you see in April of last year, they all went in the tank. That's when the S&P went down to 4,800. Then, of course, it went kind of in the tank here in March and April, right before the big run, right? And now in January, you can see in January, we were at 66 on the percent of stocks above their 200-day. We dropped all the way down here to 40 ballpark, rallied to 60, and now we've come back down here to 48. Now, there's a lot of resistance up here, as you can see, and it's been having a hard time getting through these numbers. These numbers come in around 56. And so bottom line is if you can get this thing trading above 56 and 60, that would mean that the percentage of stocks above their 200-day average are growing. That would mean the broadening of the stock market might be happening. And it would tell me we could even be going to 7,900 or 8,200 on this S&P. Conversely, if you start taking out 50 and then you take out 40, this thing's going to go in the soup and in the soup in a big way. So don't forget some of these famous shall we say, soothsayers or forecasters are looking for a substantial drop in the months of July, August, and September, maybe even into October. And of course, we have the first Fed meeting coming up in the middle of June. And of course, it'll be interesting to see how he categorizes everything. If he's going to redefine what inflation is and make it sound like there's no inflation, that could be an interesting thing. And then if he starts talking about how he'd like to ease money and credit as soon as possible, that would be an interesting thing. So we'll have to see what comes out of his mouth as far as what he's seeing. Again, there's a story to be made that if in fact they open up the Strait of Hormuz and they got this gasoline going pretty fast, oil prices could drop quite a bit. And if in fact they do that, because I'll show you something right now that I've been calling, and I'll show you right now. So hold on a second here. GDM 20, I guess we got to go to, well, we see it. This is the Goldman Sachs Commodity Index, okay? And I'm going to show you something. You see, when it was down here, now this is 50% oil, and the other half is split up between grains and metals and things like that, okay? So when it was down here, I was trying to explain to people down here and put it on the alert that this thing was going to break out, and there was a gap. You see this gap around 710? So I thought that this thing down here at 540, if it got cooking, which it did, would go up and fill that gap. And then obviously it even went further. Okay. Now there's a gap down here at 630. And I think it could come down and fill that gap. That would make oil somewhere around $70 or less. So if that happens, that would obviously, and that would be a reversion to the mean, right? Reversion to the mean. So if that does happen, that could be a very helpful thing for the inflation numbers. That could be very helpful for many things, including maybe an interest rate cut in the fourth quarter, huh? So the bottom line is that you've got a lot of things going on here. This is one of them that's very interesting because, again, the lines are still pointing pretty much up on the charts. So this is reversion to the mean only right now. This is no downtrend. The downtrend happens like when it goes from here to here. That's a downtrend. But these lines are pointing up, and that's an uptrend. So view this as a temporary pullback if you get it. And if it goes down to this number and closes the gap and holds that line, and oil holds the 70 mark or whatever, that would be an area where you might want to get long the energy markets and take advantage of what would have been a substantial drop from 120 down to 70. So keep an eye on that. What else was I going to show you? Oh, yeah, the interest rate picture, because I've been pretty good on this one too, but it's confusing. As you can see on the 20-year graph, everyone up here was telling me rates were going to drop, and they could drop. They could drop right down to 275 or 3%. This is on a yield on the 10-year. And of course, it was trying to roll over, but it could never take out the lows of 388, which was from April of last year. And it could never take out this 360, which was the low of September, August of 2024. If it takes those two things out, then it is, in my view, going to definitely get lower yields. But that's not the way it broke so far, right? So that's why as long as it stays above 420, the likelihood or possibility that you could pop up in interest rates and spoil this stock party is present. Okay, so I just wanted to give you a few little ideas on some of the things that I look at, and then I'll show you right now some of the stocks that I have very much liked and have put on the alerts in the last couple of months. And we will start out with, again, a lot of them have to do with the software. So again, we're looking at Marvell, and you could see it was turning up here in the month of March. And obviously that was a very large mover. And then things like Arista Network. And this was turning up here, and then it had a rally. Then you come back, you take another shot here, and now you're back on the bicycle again. Next one up is Qualcomm. I mean, there's a lot of them, and you know them, but like I say, they've been on the alerts. If you read the alerts or you have any questions on the alerts, of course, that's what coaching is all about. So if you turn up here, you can see we had once you got above my two big resistance lines, it was boom, 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 had the correction, take a shot on the correction, on the reversion, and right back up into the ozone again. Again, your opportunity to get on some of these trains is if there's a pullback. That's especially with options, call options. If there's been a huge up move like now, they're a rough racket to deal with because the premiums, because the implied volatility is so high, is enormous. Some other ones that let me just look at some that well, these just took off this week. And here's your service now, which I thought was at a low. And of course, that's paying off big time this week. You got Workday in there. And that's another one that's popping pretty good. And even something that did not pop after earnings, but if you stuck with it, it's popping today. And that, of course, is Salesforce. So the enterprise software companies definitely have gotten a bid this week. Another one that was way down that I put on the alert that I thought had a very good value is IBM. And again, it made its turn down here. You had a tremendous move, a nice big pullback to take another shot at it, and now you're way up here again. So the bottom line is again, these are some of the things we're trying to see and we're trying to look for is opportunities where good companies that we believe are good companies have options where the seller of the option is probably going to get whacked. Meaning if you sell calls after you go from 320 to 220, you're a little late. And when you're late, you can pay dearly for selling calls into the abyss, or credit call spreads, where we try to pick up $1 to lose 10, that kind of thing. So that's why you got to be careful. No strategy works all the time. And the markets do change. And when they change, you got to readjust yourself for the changes that you see. I just was looking here. Give me a second. On a couple of other things that had happened here. Well, this company here, again, has been really going pretty good. And this is in the biosciences. And this one here is called Twist. And this one here also, like I say, was starting to, come back on a correction and then boom. So, these moves from here to here in a short period of time are very, very attractive for the 1 month and 2 month or even shorter term type call options. So there's a lot going on out there. And again, my Periscope is up every single week trying to find some of these things. And so I do encourage you to give us a shot and try to take advantage of my knowledge and expertise and my analysis, because I think there's good value for you there. All right. Well, if you have any stocks of your own, because I've got other ideas I can show you, but I was going to find out what your ideas might be. So let's take a look and see what's on the docket here. 15 minutes into the show. Okay, so it's BKSY. I'm going to put that up there. And there you go, BKSY. Black Sky Technology. Well, not much to say. It gave you a great buy. So first of all, it's testing here, the great place to take a shot. The options are dirt cheap. Then it rallies, comes back, take another shot, dirt cheap. Then it rallies, comes back, options are dirt cheap. And then they're up here. Now they're pulling back. So again, this is a game that's already started. And I don't particularly like to get into things that have already made such a big move. I'd rather see things that have not made a good big move and try to get into them before they make this kind of move. But if I had to give my analysis on it, I go to the 20-year, and the 20-year tells me there's still plenty of real estate up here if it wanted to keep going. And then the weekly tells me it's just about at the highest price in 5 years or whatever, And on the 1 year, it again, this is a minimum reversion to $45, and another area would be about $40. So if it stops here, God bless them. And if it doesn't, then again, I would be prepared for going into the high 30s, low 40s, and see if that area would hold. So again, obviously technology, I don't know exactly what they do, but whatever they're doing has obviously been gaining steam. But this gives you opportunities to try to take advantage of a dip. So again, trends up, looks pretty good. Again, this high here would probably be some pretty good support. And then the 40 number here would be good as well. Okay, so let's see what else we have here. Let's see. Okay, PTIR. Let's see what we have here. PTIR. Okay, PTIR is double long Palantir. Now, like I say, Palantir was something I was bringing up very recently because it didn't look well. Let's look at Palantir first, then we'll go to this one, huh? Because Palantir is part of that software business that is getting a turn. So like I say, it's another one that the prices were down and going sideways, and now they've made a big turn. And basically, you're looking at something that has gone from, well, obviously, in the last 2 days, it's taken off. So the calls were pretty cheap when they're down there, but obviously, they've taken off very good in the last 2 days. So again, it's part of that group called software in the IGV. And a lot of them have been doing pretty good, and that's one of them. So again, it's running into some resistance here. If it gets through here, then you've got a lot more potential. But is it possible it could run into this and pull back? It's more than a little bit possible. And then if I look at the 1 month graph, you can see it's extended. So a pullback would not be shocking. And again, using the 5 year tells you why. Because there's lines here that it's going to maybe have trouble getting through. As you can see, it tried to approach 160, but did back off a little bit. So again, that 160 number would be something I'd be keeping an eye on very closely. Closes above that would open the door. So you can see 160, close above it, opens the door to get going some more. Can't get through here, then maybe you could get a pullback, and a pullback towards 144 to 140, where it just took off from, might occur. Also, you might look for Fibonacci, measure from here to here, take your 61%, and that might be, and there's a gap there. So we'll have to see if it's going to pull back towards 144. But clearly 160 is a big number. So that would be what I would say there. I don't trade these leverage products too much. So I'll look at it and I'll just act like it's any other thing. PTIR. Okay, yeah. So anyway, it looks pretty much like everything else. It's trying to make a turn here. It could, if we can get through 160, I'm sure it might be able to go up to that 22. I love the RSI down here holding 40 holding 40. So that was your indication that you're near the lows. Because if it can't break under 40, in my view, it's evidence that you could be at a low. And then basically on this here, again, you've got problems right here, right around $19. And then if you get through there, you got a little problem up here at 24. So if you got in here early, you got some stuff to work with, and then you got to figure out if you want to A, grab your profit, B, roll your position up or do something like selling out of the money call to grab some money or whatever you'd like to do. But the point is like I say, this is decision time because, you got to figure out if you let it run and it keeps going, beautiful idea. If you roll it up, you still could make some money because there's another leg there, but you're also going to give up a good strike price. So that's a problem too. So again, it was a good idea a couple of days ago, and it looks like it's panning out, but there's reasons to be concerned that there could be some resistance above. And again, the VIX is down at 15 and the stock market is at 7,600. And so again, you're not in the cheap seats anymore. Okay. Anybody else have any other stocks they want to look at? ETF for data centers. DTCR, right? Isn't that it? DTCR is the one that I own. Data centers, not a bad thing to own, right? There you go. So you want a data center ETF, you asked, and I just gave you one. You want a memory ETF that includes Samsung, and there you go with DRAM. So you want to play the ETF game for memory or on data centers? Those are the two. You want to play one on cyber security? It's CIBR. And you can see that's another one that has been a good one to be in. So these are some of the ones that I've done, but I've done them years and years ago type thing. Anyway, so yeah, that's how you kind of play some of those things there. Anybody else have any other stocks? Send them on down. Okay, so let's talk about other markets real quick and see if there's anything else happening. These metals, the industrial metals, XME, that thing is either breaking out here or it's going to come back down, but it looks like it could accelerate to the upside. And these things would include your aluminum and your coppers and your, Cleveland Cliffers maybe, and other ones like that. You can look up and see which ones are in there. Newmont Mining, I'm sure, is in there. And then if you look at the longer term graph, which is your weekly, you can see it's held to support. So if it starts blowing out 135 and 130, I would imagine all the metals are getting back on the bicycle. But that is for sure uptrend in my view. And so, like I say, right now you have got to be planning on the breakout to the upside, unless you started to pretty much close under the 110 number. Okay. So, okay. Do you have any other questions or anything? Please let me know, and I'll be more than happy to go over that with you. And then you got gold. You got gold going, where are we here? It's 45.50. Yeah, I wanted to show you that as well. If gold were to start closing above 4,800, I would be very strong on gold. And silver, if it goes above this 80 area and then 85 area there, you know what I mean? Then I would start thinking there's a pretty good size run to be had. Some of these metal stocks are still pretty far down. So if there was a turn, there's an opportunity on things like Hecla Mining, because it used to be 36 and it's down here. There's an opportunity on Kinross, because it used to be at 40 and it's trading at 30. So, there are many, many gold stocks. I'm familiar with many, many of them. I've been doing this for decades upon decades. So that's why I'm very familiar with all the stocks out there in some way, shape, or form. But of course, I do benefit from when subscribers do have ideas and questions. Sometimes things are unearthed that I'm not following, particularly at that time. So anyway, yeah, the gold and silver, not ready to go, but if they were, you can see there's opportunity there. Again, also on the crypto, you can see that MicroStrategy is trying to get going here. But if it does break out of here, this could be another one of those software-y type companies, technology companies, in addition to the Bitcoin that could get going. But again, it is still incubating, you might say. And then, of course, the other stuff like HUT, again, has been a great place to be. And then you got a couple of stocks that could be affected as well, like IREN again, and Applied Digital. And they're all kind of settling down, and they all had good runs here. So it'll be very interesting going into next Friday, where we have the jobs report, and then the following, when the Fed's going to have a meeting, and we'll hear this guy for the first time, exactly if this rally can sustain itself. Because if there was vulnerability to the rally, I would imagine by the expiration date of June 18th, which is the third Friday of the June, that could be a turning point. So I would be very keen on keeping an eye on those dates, and also keeping an eye on the market. Let's go real quick here over here, and then I'm just going to explain how you can get my information each week and take advantage of what I know, and also let me know questions you have, not only on the market, but options itself. As you can see, we're hitting the 7,600 on the future. And of course, that's a milestone. And again, it's come a very long way here, but that's because, again, we've had that big earnings jump. So again, there's a good reason why it's up. But again, will the earnings keep this pace? That's a big question. And will the CapEx just continue to go without fail? That's another question. And then is there supply bottlenecks that are going to make it very difficult to deliver? And of course, that could affect things as well. So there's a lot going on. A lot of people have been looking at NVIDIA, and I'll give you that before I go and tell you what's going on. NVIDIA, again, if it is any good, it's got to hold this area here. And if it is any good and it holds this area here, it would not surprise me if this thing keeps going that it could even take out that high. So keep this number here. You're getting it on sale on the dip. So keep an eye on NVIDIA. It could be a good place if it can hold this recent low, which is around 210. All right. To get a hold of me, you can simply email me, optionprofessor@gmail.com. What I can do for you is pretty simple. We have a options course. So if you've done options before or haven't, this course will be very helpful. It's 3 sessions and 6 hours of information, and it's free, even though there's a value of $395. Second thing is we have seminars every Tuesday, and you get an alert telling you a little bit about what I see going on and what stocks I see going on every Sunday night. And finally, you get coaching, and that means you'll get my cell number. You text me. We can talk about the markets. We can talk about ideas you're hearing from other people, and I can give you my view on what it looks like based on what I see. And so it's very helpful to not only learn more about options, how to trade them, how to manage the risk management, and also it's very helpful, again, to get new ideas that you're not watching as well. So do check out optionprofessor@gmail.com. And also, I think you can click on one of the links that David put up and get started, because, again, a very exciting time. And I've got brand new ideas that I'll be issuing on Sunday. And I think that would be very worthwhile for you to read that every week and to review these ideas. And of course, use the coaching sessions, which is a $1,600 value if you do the yearly. You get over about $2,000 worth of value. And again, there's a lot of guys out there talking about options. I can only talk for myself. I've done them for decades. I've done seminars throughout the country for decades. I know the subject matter, and I've explained options to both novice and experienced people. So take advantage of it. Don't miss the boat on this one. Thank you very much for being here. And again, if you have any other questions that I haven't covered, or any stocks or anything, it's optionprofessor@gmail.com. Okay, other than that, I'm going to send it back to David. I'm going to stop sharing, and I wish you all very well and have a great weekend. Okay, thank you very much for being here today. I'm Jim, the Option Professor.
All right, thanks, Jim. All right, and back to close out the day for us is Harry Boxer. Harry, are you there?
Yes, can you hear me?
Yeah, sounds good.
Okay.
And you should be able to share your screen and get set up.
First of all, I'm going to share my, get that out of the way. Are you
Okay.
seeing my unblocked screen here?
Yes, looks good.
Okay, good. And let me know when you're ready to start.
All right, I am starting my recording again now.
Okay. Hello again, everybody. It's Harry Boxer, the technical trader from the TechTrader.com, a site that has been around since 2001, I should say. It's going to be 25 years in July. And I've been doing this for over 50 years. Long time experience in Wall Street. Wrote a book on technical trading called Profitable Day in Swing Trading. And I'm delighted to be here again with the Timing Research to give you my take on whatever stocks you may have in mind. So go ahead and post symbols right now, and we'll get started as soon as possible. But I just wanted to say that you can join me for free for 2 weeks by just signing up. No credit card necessary. Come on in and join the party, have some fun, make some money. It's a really great place to be. There's a lot of very smart people who've been with me, upwards of 15 and 20 years, some of them, but it's a place that where you can learn and be mentored, but not just by me, but by some of the people in the room who enjoy doing that. More importantly, we trade 1 minute intraday charts. We do swing trades as well, but the intraday daily stuff is done on 1 minute charts using my 50 plus years of experience doing that and pattern recognition. And that's the key to being successful in trading. Number one, being disciplined, focused, and prepared. If you're prepared in the morning, and I prepare you for the most part when you come in my room, I give you targets and stops at every stock, and then I'll guide you along the way with live web videos and webinars all day. Every evening, I give you a charts of the day webinar, and the weekend I spend hours going over thousands of charts and doing the weekend webinar for you. That is a very elucidating summary of what went on at Wall Street and what we can expect for the next week. Okay, let's get started. But I want to share my other window. Let's get to that. Share. Let's see where is that chart? I believe it's there. Are you seeing my TC 2000 charts?
No, it's yeah. Okay, TA.
Right. Okay. That was, by the way, that was a trade we did today. Okay, TA popped and then flagged all morning. And when it broke out right at the opening, we put a buy on it at 104. And as you can see, later in the day, reached 124 for a 20-point day trade. And most of us were in that until the very end. I gave them a target at 123, 1.75 to 124. And I think it tagged right at that level at the end of the day. Right, 124.66 was tagged. So everyone met their targets. But for individual targets were 109 and 114. I raised them to 118, 21, and 24.5 range. So that's what we do all day. We give you the charts. We show you what the patterns look like. I'll raise my stops and my targets all day until we're either out of it or looking for more. All right. Anyway, let's get to some symbols, and I'm going to give you my take on whatever I see out there stock-wise. Leon wants to know about MYRG. My take on the daily chart is it's obviously a very extreme stock and it's a strong group. The engineering construction group has been very strong in the last couple of years. I'll show you. You can see several examples of stocks that have done incredibly well. Now, this one started its big move back here when it broke out a year ago in April. And you can see that in May, actually technically broke out in June. Pulled back and retested, and then channeled up. Recently, it accelerated, and now is what I consider an ascending bull flag. This is very bullish. However, what I would do now is when I see a stock that's gone this far, and forming this kind of a pattern, the first thing I look for is where's the pullback low? That will be 419 here, 422 there. So the 419.22 3-point zone is your support. I put a stop at 418 roughly. And you're good to go. Where would the measured move be? Well, at this point, really, do you believe 560 might be a target? 550-60 zone is my target on this one up there. And it based on the angle of ascent, based on the way this looks, there's no reason why I shouldn't be able to reach that. So I hope that's pleasing to you, Leon. MYRG targeting a swing to about 550, 65 range. And for the next question on Tesla, TSLA. Tesla's really outshone a lot of the stocks in the NASDAQ 100. It obviously looked bad for a few months here. This V bottom right hand extended, run up to resistance, pull back and test the moving averages. And that wedge in a 1, 2, 3, 4 has a fifth wave started, and the fifth wave projects somewhere up around, I'd have to say, as long as the market keeps going, no reason why Tesla can't get back to 500 or near it. 495 to 500 is my target. We have a question on XLE. To me, it's a very toppy looking pattern. I could be wrong, but here's a level you want to pay attention to. In fact, okay, obviously broke out of a massive multi-year base, ran up sharply, and now it's consolidating. Or is it? Or is it topping? One can't tell until it either breaks out above that level or breaks down below that level. It's closer to breaking down than out. You can look at the underlying technicals and show the deterioration in the technicals here, never a good thing. It's not like there's the big divergence. There isn't. And your key support has to be roughly 55 and the spike low here at 53.40. So somewhere in that 53.5, 55 zone is critical support. As we break that, we're looking at 49.50. And on the upside, obvious resistance is 61.5, but the multi-year high of 63.5, roughly in that area. 61.5, 63.5 would be my targets. And then on a longer term basis, if we, in fact, this is going to make a much bigger move, this is the energy sector, right? It looks pretty toppy to me. I'd rather be short than long on this because I think oil's coming down anyway, but that's just me. Until the trend changes, the trend is your friend. The move from 44.5 to 63, let's see, 19 points would give me a measured move of 72. So we can say if it breaks out of this pattern, I would look for a run all the way up in this range here. Somewhere around mid-range 66. So 66 and 72 longer-term targets if it breaks out. If it breaks down, obviously you know where that's going. I still favor the downside based on technicals and based on the overall pattern. That's my take on Tesla. For Zach, I'm sorry, XLE. Now, Patel, I've seen him before. Patel Devendra wants to know about PS. I believe that's public storage, isn't it? Pershing Square, okay. Oh, recent IPO. Yeah, anytime you see a 1, 2, 3 and a pullback of that nature, about a 0.375 Fibonacci, that is my support. So if this is going to work, then you don't want to blow the pullback low, call it stop under 34. And if it should get back above the 40, call it 42.5, 3 zone, it's 41.5, 42 above here is where I think it can accelerate. I would retarget somewhere around 46.7 and then beyond that in the low 50s. It's not a bad chart. Anytime you see a spike and a pullback fib retracement, it often does extend. I like the low volume and a pullback. I'd like to see some volume pick up as it moves back above 41.5. It should start seeing some good volume. If there's any other questions on any other symbols, folks, please post them and I'll get to you. Nokia. Well, you know, it's funny. Some of the stocks like some of the European banks, Deutsche Bank and some of the others, Nokia and a couple other European stocks have done very, very well, especially in the last year, 6 months, a year. You can see that Nokia, let me go back to a weekly chart, had built a big base going back, and I'm not kidding now, 10, 12 years. No, Microsoft did that for 15 years and took off. I'm not saying this is another Microsoft because it's obviously not, but the one thing to consider is there is a 17-year resistance level up in this zone, but anything that's that far back is less meaningful. At this point, when you're looking at the trend, let's look at the daily chart. Beautiful rising channel. You got right up to the target zone, the resistance at around 16 3/4, reaching 16.62 and backed off. If this is going to continue its trend, then my next target is 18 3/4, possibly 21, 22 in the next few weeks, if the market cooperates. If not, support is around 13, and then delete that at about 12 and 12.10. So those are levels to watch. I would not be shocked to see a pullback test of that area where the rising 50 comes in, something like maybe there. In that zone there towards 12.5 3/4. So be careful, because you can see that 3 days in a row down now with not light volume. So it's being sold. And it was 5 days in a row here before the 3-day really rallied. So if you take a look at the overall structure, 8 of the last 11 days, this has been on the downslope. Although it made a higher high, that's always constructive. The internal trend channel line is also keeping it in force, and that basically means it needs to hold it there, or it's going to test there. Do I like this overall? Of course I do. Nothing not to like. And that was for Pat. Zachary wants to know about MTZ. No, that was Raleigh wants to know about MTZ. MTZ is weakening. Another engineering construction firm. Look at this thing go. From April of 1 year ago, it was under 100. And by May 6th, it was 441. So something that was up 4.5 times its value. But if you take a look further back at 23, the stock was trading at 50. So it's really gone eightfold in the last few years. Now, anytime an angle of an ascent changes, take a look at this. This is a tight channel, but when it goes on for months, you have to respect it. In addition, each time the stock came down, it went a higher low, and then a higher low. Here it's making a lower low. What does that mean? For me, it means that the trend channel and the entire trend for the stock is probably changing. If you take a look at today's action, big downside volume right on the 50-day moving average. This is as far as you want it to go. Absolutely. When I see a stock that's been in a long uptrend, it's been hugging its 50-day moving average, and suddenly there we are, I would not be surprised to see a breakdown from here. If it does break down, it's vulnerable down to 315.20. So this stock could be hammered. And by the way, this pattern, after breaking down here, let's see, it dropped 32 points in 1 day, cracking the moving averages and the trend line. And since then, a week and a half of sideways action. That's a bear flag, my friend. So you're going to have to say to yourself, do I want to protect this position? Do I have a long-term profit in it? Or even if it's a short-term profit or even a short-term loss, you want to protect yourself from a much bigger loss. Let's go into an hourly chart. You can see it more distinctly. See how the trend channel broke? The stock snapped back. It's called the kiss back. Notice that the moving averages rolled over, and they're coming down now. It's in danger territory. If it breaks here, it's very vulnerable to a further slide. So that's what I wanted you to know, and take care with this one. EZPW. Let's look at the daily chart. Another one with a big run up, massive waves. from here, 1, 2, 3, 4, 5, it looks like. This here, folks, is a very big sell signal to me. This is called a engulfing reversal bar, and a huge one, where it spikes up to 37.12 and it closes 5 points below that, or something like that. Tries to bounce, comes back down and tests. Bounces again. Here's where the key support is. Guess what it did today? That's right, it broke it. So Leon, if you're in this stock, I think it was you that asked that, yes. This is one to exit immediately or go short. That's my opinion. Now, I think the stock could come down to 27.5, maybe as low as 24.5 near term. I'd be very concerned if I were you. The angle of ascent shows a couple things. Other than the outside spike to a high and the pullback now, it's testing in 50. Now, technically, initial support broken. Has the channel broken? No. Has the 50-day moving average broken? No. So if you're still in it and you wish to hold it, I can understand that, but you better stop on the 29. That really breaks the stock. Now look at VST for Bapam. Well, anyway, VST is a stock I really loved for a long time. When it broke out, take a look at this. Here's a weekly chart. Beautiful base, breakout. And when a stock does that, and starts to accelerate, and does it in massive waves, it looks to me like a 1, 2, 3, 4, 5 waves. It's turned sloppy. It's not over yet. For me, this pullback lows in here, when it broke there, that would have been my exit point. About 179.80 would have been my out. Subsequently, it went down to 132 and bounced. And its snapback here has taken it to the declining channel top, roughly. Now, if it does break out, and it's a good company in the right area, you can see 1, 2, 3, 4 tops in this area. So what you're looking for is confirmation of a breakout above 168.9, and then a run to 182, 183. Once that's broken, if it's broken, then you can be on your way to higher levels. For now, the two resistance levels are this 168 and 183 are your targets. The things what I do want to point out to you is the longer a stock comes in the downtrend, the more likely is that it wants to break out. See this cluster of volume coming off the low? 4 days in a row thrusting from 135 to 167.68. The pullback here has got you setting up what looks like a V bottom of the right hand extension. Your support's about 150.52, and your resistance about 169. Should you get to 169, then your target is 182 and above. Be careful though, if you're in a downtrend, you could stay in a downtrend until things change. The unbalanced volume is improved, but it hasn't thrusted. With the price back up to the prior highs, the OBV is nowhere near it. That is a negative divergence, so I would be awfully careful about getting too excited about this one just yet. Next is CMPS. And CMPS happens to be a swing trade of the tech trader. Now, when it broke out above, it had the breakaway gap and pullback and started to move, we put a swing on it. I believe it was around 9.5. It subsequently made it up to 13.10 today. And I told my people, you're at resistance here from the early 24 high. And you can see that if you get through this level, there's room to run all the way to 21.22. Stock could literally double from here. The problem is it's already had a big thrust and multiple waves up. For me, it's a 1, 2, 3, 4, 5, wave 1 and 2. This is wave 3. You could get a wave 4 before the 5th wave takes you in that range. So be wary of the fact that although it's looking really good here, one or two things are going to happen quickly, I think. Either a blowout or a pullback retest down towards 10, 10 and a half. So be very careful with this one. But the momentum is strong. OBV is rising. Next question is on DSL and EVV. DSL is a looks like a fund. You can see the downtrend that it's in. See, my eyes are immediately drawn to channels and targets and stops and stuff. And I always look for where prior lows were, where prior highs are. If you're interested in this stock, what you really want to see is a move over 11, 20, 25 range. Once it gets above that, it breaks the declining tops line. The moving averages already seem to be trying to curl up and curl over. It's not a successful retest of the lows. It's a promising base pattern, but let me warn you, it has not broken out yet. So if it does go, I would have to give you a target around 11.75 and upwards of 12.5 in that area. It's not a big beta stock. It's more of a fund type stock. Fund, F-U-N-D. EVV. What the heck happened there? This is a strange chart. Oh, another fund. Yeah, it's hard to chart funds. It really is because of the way they value their assets overnight. Where's resistance on this? 985 and 1035. Those are potential targets if you're trading a fund, which I don't know if you are, but I always look for where resistance and targets are. This one's in a nasty little downtrend, but that looks like a big bullish reversal bar today. I can't tell what or why and whether it's even real, but that's my take. And for Palantir, this was looking pretty dire until the last couple of days. What I mean by that is, take a look at this. I actually put this on my short list because it had a left shoulder, head, and right shoulder, despite how good this company is and what they're up to. It formed a bear wedge and broke down, but it never broke the low. And then it came down and retested and formed a wedge. All the while during this action, the unbalanced volume stayed steady. It didn't deteriorate. It wasn't really being sold. When I realized that, I took it off my short list. And take a look what happened. 133 to 157, 24 points in 2 days. And you're coming up to a resistance level on Palantir that if it gets to 160, this stock could run into the 70s, 170s, 180s again. Good thrust, good volume today too. A mere 89 million shares traded as the stock jumped 9%. Very big stuff, and it broke its trend channel line as well. If anyone else has a question, please post it now. Let's see, we only have a few minutes left, it looks like. I'm going to go over some trades that I put out this morning. Oh, we do have a post here on EVER. EverQuote. Well, I would have told you something else 2 weeks ago, but now let me explain something to you. Nice double bottom, strong rising channel, and a platform, but it broke down. And when you break a pattern that took months to develop, it does a lot of technical damage. I would try to, go break back out, which it did, but it pulled right back to the breakout point, filled that little gap. And now it has what I consider bear flag, meaning if this doesn't break to the upside, it could cause another leg down. That, my friend, is a bear flag. Unless I see a price volume surge over, let's call it 20 and a quarter, then it's vulnerable to lower levels, in my opinion. This is a sloppy chart, and especially since it popped one day only, had no follow through. That always bothers me. Any other symbols, folks? Any stock? Okay, I'm going to show you some of the tech trader swings that we have going on right now. Hang on a second, I want to pull that up. Be right with you. Okay. So I put on a couple swings recently that I want you to see. Okay, there they are. So RXT. Major explosive breakaway move, pullback. Notice that the pullback, this is something I look for, came near or slightly below or at the gap. It held it, popped up, went back up to the moving average, and had a breakaway gap above that moving average, above that prior high. So to me, in an Elliott wave stance, it's a 1, 2, 3. This is wave 4. Now, wave 4 might take some time, but I decided that because it held the pullback to the support at the gap, this one might have a chance of running, particularly if the market doesn't top out. Again, a floating, rising tide floats all boats, right? If my target now, its stock is 515. My targets are 7.5, 10, and 12 on this one. That's RXT. They had a big announcement recently too. DGXX, powerful move. Broke out of a base, did a 1, 2, 3, and it's setting up a beautiful bull coil. I think it's going to explode and go into the high teens, low 20s. I do have another symbol. Let's go back to LWLG for Jones. Here's my problem. This was a tech trader swing. I took it off. Why? Beautiful chart here. Broke the trend channel. Notice the moving average is now flattening out and about to roll over. This is a left shoulder, a double head, and a right shoulder. And a weak one at that. The volume pattern is there for a head and shoulder pattern. It looks like it's going to crack and die. First support, 9. Second support, all the way down here at 7. If you look at the overall structure of this pattern, it's a 1, 2, 3. Wave 4 may be underway, which could pull it back a little bit further. So be careful, Jones, on this one. Be very careful. Put a stop in my opinion, under this range. 10.5. It closed less than that. What did it close today? Got at 1040. It closed at 1082. So it's at that point where it could break down and get hammered back. And just the measure move alone could take you down to, like 8.5, 3/4. So it's dangerous. It's had 5 days in a row of distribution, and 9 of the last 11 days have been down. It's just not conducive. If you're long, you better think twice about it, or at least play it with a stop in place. This could be your new downtrend, and it points down towards 8. Anyone else has a question, let me know. Couple more ideas, and then we can call it good. But for now, what time is it? Yeah, we're time's almost up. Because I'm the last speaker, I can take a little bit more time. TE, look at this long-term chart. Beautiful base, breakout, retest, pop. 1, 2, 3, 4. Fifth wave is well underway. Again, this one could last into the mid to high teens, if not more. Today, the last couple of days were down days, but slightly lower volume too. That's a good sign. I'm looking for this one to make a move into the 13 and 16 range. Like ASPI, inverse head and shoulder, breakaway gap, pops through the neckline, and today was kind of an inside stall day, like the market itself. My targets were 8.5 and 11. They still are. You can see the downtrend broke, moving averages crossed over, the base is complete, breakaway gap occurred, and you're on your way. Here's one I'm very intrigued about because it comes from one of my major institutional sources. It's uncannily correct. It's called Broadwind. Spiked up, popped up, and then it has a falling wedge. You got to wait on falling wedges, but if this gets over 410, we're looking at 5.5 and 7. Very intriguing pattern. AEVA is a swing trade for the tech traders. When it came out of the base, I put a swing on it right there. It then retested and went vertical. It's now consolidating again. I think it's not done yet. Looking for 33 and 38. Folks, yeah, if you still have time, if you want me to give you a take on some of your positions, throw out a symbol. I'm liking some of the quantum stocks again, in particular Rigetti and QBTS. Both of them inverse head and shoulder breakout of wedges. Same thing here. This group could explode again if the market stays together and it isn't over yet, and we have another few weeks of bull market. Who knows what? You never know with this market. But you know where to stop it. It would be under the neckline, and the targets on Rigetti are up in that 30, 35, 40 range. One of my favorite picks this year was Navitas, NVTS. We first started trading this stock when it broke out a breakaway gap here in a 4 or 5 range. It had a perfect 1, 2, 3, 4, 5 wave LA wave move. We sold it. It built a base. It broke out. We went back in. 11.5 to 35, 33 and 82 to be exact. 5 ways up. We sold it. I still like it though. I'm not sure how far it can go though. We'll see. If anyone else has a question, please post it. It doesn't look like I think you guys are done. I'll give you a couple more of my swing trades and we'll call it good for today. Here's the real cheap stock that you may be interested in that has a great looking overall base pattern. Check out the weekly chart on this one. And we traded it from here to there. And now it's built a beautiful base and breaking out again. Look at the action late in the day today. Breakout. I think CRNT makes it to 3.5, 4.5, and 5 3/4, 6. OSS is another tech trader swing. When I came through the double top, I put a swing on it right there at about 13. It's made it up to 1850 and still looks higher with a target of 22. You can see the kind of charts we look at. We look for trends, stocks that are coming out of consolidation patterns and bullish trends. Since we've got time, I'll do a couple more. Alst has been a great successful trade for us. It broke out of the falling wedge after 1, 2, 3, 4, 5 wave Elliott wave decline. It broke out. It retested twice. It broke out again. It retested again and spiked up. Today, jumping another 3.79 or 9%. But it's already gone from 24 to 46 in just about 5 weeks. I'm very pleased with that one. If it goes anywhere near the long-term channel top, this could be 60 or 70 bucks. And a little Copen. We made a lot of money with this one in the past. After coming out of the falling wedge and breaking out right there, give you a swing on a low price stock, 2 3/4. It went up to 6.45. It still looks like it could be $8 or $9. I think that's going to be it, David, for today. There's no other symbols. Folks, thanks for being here. Remember, you can join me at thetechtrader.com. Sign up for free, no credit card, and come in for a couple of weeks and enjoy the ride and make some money, maybe pay for a year in advance. That's the way it goes for most people when they join. And this is HB signing off. Have a great rest of your weekend. And I will talk to you down the road. Bye, everybody.
All right. Thanks, Harry.
Yep.
Thank you for closing out the day for us again. And yeah, great analysis as always. All right. So let's see, we did 11. What was it? I think it ended up being 10. Yeah, 10 sessions today. So yeah, let's see. All right, so I just posted I did live stream the whole day to YouTube. So that means the entire event is instantly archived onto YouTube. So you can review the full day at any point at the link that I just posted into the chat. And then if you want to bookmark this, I am processing the individual, the individual recordings for each session, and those will be posted onto the Timing Research website, or the links will be with notes for each. And yeah, and then also mark your calendar if you enjoyed today's event. We are going to do another one of these in 2 weeks. We had some tech issues today, but I kind of like doing this on a Friday. So for you all in the room, what did you think? That it's a good way to close out the week? All right, so um and all right, so yeah, so mark your calendar. Join us again in 2 weeks for this. Also, if you're new to Timing Research, I do have a panel discussion every Monday at 4 p.m. Eastern Time, where Jim, the option professor, who was on right before Harry, he's the moderator, and then sometimes Harry's on, sometimes Sonny Harris or Chris Sayer, or who else? Michael Filagera, just whoever I is available for the week. We have a panel discussion every Monday about what's going on that's important. Also, our next big event of the Synergy Trader series, which is our larger themed presentation events. You can mark your calendar for that as well. That will be July 7th, 8th, and 9th. And the theme for that will be favorite indicators. Okay. Okay, yeah. Someone just said in the chat, first time here, interesting format. Yeah, okay. Glad you like it. Yeah. Yeah, I try to do this is the Analyze Your Trade or AYT series. So I'm trying to do these once or twice a month now. And then, like I said, then we have the panel discussion on Mondays, and then the big Synergy Trader events are every other month. So that next one will be July 7th, 8th, and 9th. Favorite indicators will be the theme. We'll have up to 30 presentations over the 3 days. So be sure to join us for that. Oh, yeah, the easiest way to get updates on future Timing Research events is to just just click the link I put in there, add the Timing Research official calendar to your Google Calendar, and that then you'll be able to see all the events and get a link straight into the room without having to find it in your email or anything like that. So, all right, that's it for today. If you have any other questions after we close the room, you can reply to any Timing Research email that comes directly to me, or if you go to TimingResearch.com, there is a contact there's a contact page on Timing Research. So I'm just posting these links again one more time for you. Oh, a couple other things you might find interesting before we close out. There's this SPY Playbook PDF from Big Trends, and then also this Tesla ebook from Big Trends that I think you'll find interesting. So click on those. All right, and that's it for today. Thanks, everyone.